Hello and a pretty lovely morning. So now today we are going to pick up the revision series and we have codenamed it as Ballistic Revision. Ballistic Revision. Now as far as this particular revision is concerned, before I start, let me tell you actually we can divide your entire course into these segments. We know that there are some very lengthy chapters at your level, isn't it or not? Like branch account, like department, like hire purchase, like NPO, like insurance claim and partners. These are of very lengthy nature, no doubt about that. But besides that, we have actually some medium level chapters like joint venture, consignment, final accounts, single entry system. And then we have some chapters. They appear very small, but they are very vital from the examination point of view. Let me tell you actually, that is bills receivable, reconciliation statement, depreciation and leases. So even though we are doing the revision, but you need to keep it in mind that you have to do this chapter in a comprehensive manner. You cannot be selective. Correct? Similarly, as far as theoretical chapter is concerned, capital and revenue transaction is of paramount importance. That means we have some room for being selective as far as major chapters are concerned and as far as medium level chapters are concerned. Is it clear to you? Because these are the chapters, because of their length, because of their huge length actually, we tend to get scared. Correct? Anxieties engulf us and we always reel under what we call sort of pressure, actually how we are going to retain all the concepts, isn't it? And besides that, we have the accounting standard. But importantly, once again, I'm reminding you, you have to do all this chapter comprehensively. Now, question narrows down to the fact, actually, how in a quick time, actually, we are going to cover all this particular chapter. Of course, you can do quickly something when you know in advance, which is the important part where you need to stress, which are the important questions. That means in order to prepare the chapter, you can focus upon only that particular topic and you can pick up only those questions. So that way around, in a quick time, you will be able to what we could do the chapter. That means you can prepare the chapter quickly. This is exactly the theme actually which we are going to follow to cover of what we call this revisionary series. Is it clear to you? Quickly, I will revise all this chapter. Ballistically, I'm telling you, we are moving ballistically. And besides that, after having gone through the concepts, I will let you know from this particular chapter which are the questions which you need to do. So you can simply do only those questions. Similarly, regarding every chapter, I will tell you which are the topics which you need to actually focus upon and which are the questions which you need to do from your examination point of view. As I told you this way around, in a quick time, ballistically, you will be able to actually cover the entire gamut of the chapters. Correct? First of all, we come over to the branch account. Now, as far as branch account is concerned, you know better than I actually. As far as branches are concerned, you know branches are divided into two parts. We know domestic branches, we know foreign branches. Is it clear to you? Further, you also know that domestic branches are divided into dependent branches and independent branches. Isn't it or not? These are the things which I need not require to tell you, at least at this particular level. Now, coming over to the important facts. Out of branches, because branch is basically divided into two parts, as I told you. One foreign branches, and another one is domestic branches. Now, domestic branches, as far as domestic branches are concerned, dependent and independent branches are the topic. Now, from dependent branches, as you know, actually, we take into account only there are, as far as dependent branches, there are actually accounting system, data system, then stock and data system, then wholesale branch system. Wholesale branch system is also referred to as branch final system, isn't it or not? So, in branch account, you need to focus hard only on dependent branches. And as far as independent branches are concerned, only you can expect 2 marks, 4 mark questions only related to entries as we have covered in our regular classes. Correct? This way around, when you know in advance actually what you are supposed to do, then it becomes pretty easy. And as far as foreign branches is concerned, that I will tell you, you are going to get hardly 2 mark question. You will be given some items and then you will be asked to convert them into what we call reporting currency. That I will let you know. Now, as far as data system is concerned, you remember under this particular system, we used to prepare a branch account. Isn't it or not? We used to prepare a data account. Is it clear? Very simple. Now you try to recap. Close your eyes and try to recap actually how you used to prepare the branch account. How you used to. First of all, you need to understand that under data system, in fact, under dependent branches, we have 3 systems: data system, stock and data system, and wholesale branch system. And I told you that under data system, whatever system which we follow actually, all these are incomplete accounting system and the entire accounting is done in the books of the head office, isn't it? Now, as far as data system is concerned, under data system, as you know, first of all, we start with the balances of the assets. And in case if there will be any balance of the liability, we are going to put it on the liability side. Then whatever goods which we are going to send, we are going to write it on the debit side. Whatever goods which we are going to receive from the, as a return, which we are going to receive from the branch, we are going to put it on the credit side. Obviously, there will be some closing balances at the end of the year. So closing balances of all the assets will be put over here. Is it clear to you? Important items are remittances. Now, as far as remittances are concerned, you know what we mean by remittances. Remittances means whatever cash which we have received from the branch. Branch will receive the cash out of cash sales, and they will receive some cash from the debtor. So remittances encompasses cash sales and cash receipt from debtors, isn't it or not? So whatever cash will be collected by branch through cash sales and from debtors, that will be sent to the head office, and that is known as remittances. Remittances in simple words means actually total amount collected by the branch on account of cash sales and from debtors and sent back to the head office. We are going to put it on the credit side, obviously. Is it clear to you or not? As you know, whatever expenses branch is going to incur, generally head office is going to send cash for the same. We are going to put it over here. But some important point which you need to keep in mind, especially, and I also told you simultaneously we prepare debtors account, isn't it or not? In the debtors account, we write opening balance, closing balance, then cash receipt from debtors. But we write here sales return also. We also write here bad debts. There are some items actually which figure only in the debtors account. This is the point which you need to take into account. Is it clear to you? Similarly, discount. These items will not find place in the branch account. If you remember in the regular classes, I told you why these items do not come in the what we call branch account. Because these transactions are related to branches and the branch customers. These are not related. So any transaction which is related to only branch and branch customer will not find place in the branch account. Is it clear to you or not? So sales return, discount allowed, or similarly what we call any bad debts. So all these transactions are considered as having taken place between the branch and the branch customer. While doing the accounting, I told you, branch accounting, there are basically three parties: head office, branch office, and what we call customers. So whatever transaction take place between branch and branch customer will never ever take place over here. But sometimes students can get confused by the fact, sir, we are writing cash receipt from debtors on the credit side and also here. The reason here is that, first of all, branch will receive the cash from the customer and it will be sent back to the head office. So in this transaction, all three parties are involved. And that is why this transaction will figure over here. Is it clear to you? Another important point is, when we prepare under this system accounting, many a time actually I have seen a student commit mistake with respect to petty cash. Now, opening balance of petty cash will be written over here on the debit side of the branch account. Now, sometime it will be given in the question that head office has sent petty cash to the branch. So, if head office has sent any what we call petty cash to the branch, you are going to write simply here to cash. You write in bracket petty cash. You simply put it over here. Is it clear to you? Now, when you are going to write the closing balance of petty cash, remember one thing, petty cash is an asset, correct? When you are going to reflect petty cash, I told you, first you take into account the opening balance, whatever opening balance is there, whatever cash which head office has sent, you are going to add here. That means total petty cash available with the branch is now this much. Now, it will be given in the question branch manager's expenses. Or it will be given this way, petty expenses. Petty expenses or branch expenses are one and same thing. Is it clear to you? There is a difference between branch expenses and branch manager's expenses. Branch manager's expenses means total amount is spent by the branch manager out of petty cash available with him. So you are going to simply subtract it from here. And then whatever closing balance is there, you are going to put it over here. Is it clear to you or not? Is it clear? Now sometime there is one item which I saw actually students sometimes confront a bit of problem. For example, insurance amount is given here as 400 or let us say 300, whatever it is. And further it is written in the question that head office this year has sent some cash for the insurance also. Let us say 400. And in the bracket, and we also presume that accounting year is ending on, let us say 31st of March 2027. Is it clear to you? Accounting year is ending. And here it is written that this insurance this insurance expense is up to 30th of June 2027. So here you need to understand that because your accounting year is ending on 31st of 3 2027 and these expenses are related up to 30th of June 2027, that means 3 months advance. Isn't it or not? 3 months advance is given. So simply you write closing balance, under closing balance insurance prepaid or insurance in advance. You compute what we call 400 into 3 by 12 and whatever it is, I think it is 100. So you are going to write it over here. So these are the important points which you need to take care of. Another important point under data system. Because under data system, most of the time question which we are going to receive will be related to invoice price. Now, so many times I have already told you, as far as invoice price questions are concerned, first of all, you need to coolly frame the rates. When you frame the rates, you first of all write cost price plus margin. Then it will become equal to invoice price. Invoice price and sale price are one and same unless it is given very differently. Is it clear to you? Now, if rate is given 20% on cost, because rate is given on cost, we will have to presume cost as 100, margin will be equal to 20, our invoice price will be equal to 120 and 20 by 120 will be our rate on invoice price. Is it clear to you? I have already told you, loading is always done with respect to goods sent to branch account, with respect to opening stock, with respect to goods sent to branch returns, with respect to closing stock, with respect to goods in transit. Loading is generally done only with respect to goods which are flowing between the head office and the branch office. That is why loading will never ever be done on sales return, because sales return means goods have been sold to the customer by the branch. And if customers are returning the goods, that means they are returning the goods to the branch office. So that's the reason actually here you are not going to unload it. You are not going to do any loading. Loading is done only with respect to goods sent to branch, opening stock, goods sent to branch, returns, closing stock, goods in transit. And you know the treatment. Loading is always put on the opposite side. So these are the points which you need to take care of when you do the accounting under data system. Is it clear to you or not? Coming over to next system, under stock and data system. If you remember, under stock and data system, we used to prepare generally 4 major accounts, correct? One is branch stock account. And then besides that, we used to prepare branch, just wait. Branch stock account, then branch debtors account. Isn't it or not? Don't go by the handwriting today, because if I will write slowly, it will become little bit delayed. I do not want to create any sort of delay here. First of all, we will have to prepare stock account, branch stock account. Then we will have to prepare, as I told you, beside this branch stock account, then we will prepare here branch P&L account, branch adjustment account. In fact, number 1, number 2, number 3. And then, if you want, and in case if there is information with respect to debtors, you prepare branch debtors account also. These are the accounts which we generally prepare. And besides that, sometime we may have to prepare branch asset account like plant and machinery account, etc. in case if it is given. And we may have to prepare petty cash account also. Correct? But these are the 4 accounts which we need to take care of. As you know, this system, stock and data system, is a pretty wider system in comparison to the data system. Why? Because under this particular system, we can find out gross profit and net profit separately. And second, we can exercise better control over the stock. How can we exercise better control over the stock? The reason is that because we are preparing the stock account separately. So as you know, we are going to put here opening stock, all the transactions related to goods we are going to put here. We will write opening stock, goods sent to branch account, goods sent to branch returns accounts, even goods in transit. If there are, we are going to write it on the credit side. Besides that, closing stock we are going to write. Very importantly, under branch stock account, don't forget to write cash sales and total sales. Cash sales and credit sales. That means under this system, we will write here total sales. Whereas if you remember, under data system, we never write credit sales in the branch account. Credit sales is written in the branch debtors account. But here we are writing total sales. Why? The reason is that because if we are not going to write the total amount of sales here, we cannot find the closing stock. That is why total sales are always written over here. Is it clear to you or not? Number 1. very important point is that sometime it will be given in the question abnormal losses. So abnormal loss, it means abnormal loss of goods. Abnormal loss of goods also you are going to put it over here. If normal loss is given, you are again going to put it over here. Is it clear to you? Generally, when we prepare this account, we either get what we call deficiency or we get surplus. These are the important rules which I told you. But I also told you, very importantly, if the figure arises towards the credit side, the first preference must be given to closing stock. But 99.99% closing stock will always be available. So in that particular case, if closing stock is available, is it clear to you? In case if closing stock is available, then generally the balancing figure will be abnormal loss. But 99.99% closing stock will not be given in the question. So that is why generally we will take here normal loss. Try to understand. If balancing figure appears this side, credit side, first preference will be given to closing stock. If closing stock is given in the question, then you simply write as deficiency. Deficiency is also known as spoilage, if you remember, is spoilage. Actually, deficiency, spoilage is nothing but it is a sort of abnormal loss. Is it clear to you? But better you write deficiency or spoilage. Number 1 point. If balancing figure arises towards the debit side, logically the rule is that first preference is given to opening stock, but 99.99% opening stock will always be available unless it is a new branch. Then second preference, goods sent to branch. Then under this third preference, we take into account surplus. Is it clear to you or not? Another important point is that because 99.99% question will always be of invoice price. So whatever opening stock is there, you are going to write the loading on the credit side. Even goods sent to branch, you are going to write the loading on the credit side. Similarly, we never take the loading of sales. So goods sent to branch returns loading, you are going to put it on the debit side of branch adjustment account. Goods in transit, you are going to put the loading on the debit side. Take care of this particular fact. Sometime it would be given in the question that you have transferred some goods. If your branch has transferred some goods, you are going to actually write on the credit side, goods transferred. If your branch, suppose you are branch A, and you have transferred goods, that means whatever goods have been sent by head office, you have written on the debit side. Out of these goods, you are transferring some goods. If you are transferring some goods, obviously the goods out of your stock will get reduced. So you are going to write it on the credit side. Now, if goods transferred by you is given, then you are going to write it on the credit side, and besides that, you are going to take the loading on the debit side. But sometime it could also be a possibility that other branch might have transferred some goods to your branch. So in that case, you are receiving the goods, and you are going to write it on the debit side, and you are going to take the what we call loading on the credit side. This is number 1. Regarding abnormal losses, if you remember, I told you, first of all, suppose abnormal loss is 10,000 and loading rate, let us say, is 1/5. Then you are going to take the loading of abnormal loss, 1/5, 2,000 you are going to write here, and abnormal loss at cost will be written over here. Profit and loss account is always prepared at cost, and branch stock account is always prepared at invoice price. Regarding normal loss, whatever normal loss is given to you, is it clear to you? You put the normal loss on the credit side, and in case of normal loss, we need not require to do or calculate any loading. Whatever normal loss is there, you simply put it on the debit side. Whatever normal loss is there, entire normal loss will be taken to the debit side of the branch, to the branch adjustment account. Is it clear to you or not? Because branch adjustment account is synonymous to trading activity. So normal loss means something which is related to your trading activity. So that is the reason actually why it is not split into loaded part and cost part. Another important point. If we have deficiency as the balancing figure, the treatment of deficiency is similar to abnormal loss. We are going to take the loading. We are going to put the loading on the debit side, of course, if there will be deficiency, and we are going to take the deficiency at cost on the debit side of profit and loss account. Is it clear to you or not? These are the important points which you need to take care of as far as branch account is concerned. Is it clear to you or not? Clear? So, it is very important: opening stock, goods sent to branch, goods transferred, and how to take into account the balancing figures. So you need to understand all the rules. Deficiency will be treated almost like what we call abnormal loss, but surplus is never split. Entire surplus will be taken to the credit side of the branch adjustment account. Branch adjustment account help us in determining the what we call gross profit. Whatever gross profit will be there, you put it over there. Sometime in the question it may be given insurance claim received, you simply put it on the credit side of profit or loss account. And after that you are going to have your net profit. But importantly, in this system, the importance of branch data system is generally not there. However, we have done some questions, if you remember actually, we have done some questions that opening balance, closing balance, we are going to write, credit sales, we are going to write, bad debts, we are going to write, of course, discount, we are going to write, whatever what we call bad debts, discount. In case if we have given any allowances to debtors, we are going to write over here. And remember one thing, all these are expenses and these expenses will be put on the debit side of the branch account, branch P&L account also. The importance of data will be there only if amount of credit sale is not given. If amount of credit sale is not given, first of all, you are going to tally your branch debtors account. From there on, you will find the figure of the credit sales. You need to write the amount of credit sales over here. Is it clear to you? Remember one thing, from examination point of view, you need to focus hard on this particular system. And we have done nearly what we call 50 questions of this particular, what we call topic only. Is it clear to you or not? Is it clear? Then there is wholesale branch system. As far as wholesale branch system is concerned, how we used to actually do accounting under this particular system, if you remember. Is it clear to you? Straightway, I'm going to take you. Just wait for a while. Just allow me a second. The notes I am referring to are the same notes which we have taken, which we have given to you in the classes. This is wholesale branch system, correct? I told you first of all how you are going to figure out that this question is related to wholesale branch system. If you remember actually while taking the regular classes, I told you this is your head office. This is your branch office. These are your customers. These are your customers. Let us say goods costing rupees 100 are supplied to branch office at cost plus 80%. That means cost plus 80, that is equal to 180. And branch is instructed, let us say, to sell the goods to the customer at cost which is 100 plus 100%, let us say 100. That means branch will sell the goods to the customer at a price of 200. Now in this question there are three prices, and generally under wholesale branch system or under catalog price questions, we generally come across three types of prices. One, cost price, another one is invoice price, this is also known as wholesale price, correct? But how we will come to know that this question is related to wholesale price? Because under this questions you will be given that head office is also selling the goods to the customers. If it is given in the question that head office is also selling the goods to the customer, then that means the question is related to wholesale branch system. Is it clear to you or not? Is it clear to you? So here you will find, just to make the point clear, I'm taking this particular question to make you understand. For example, opening stock is given to you as 20,000. Is it clear to you? Then we are being given purchases. There are two columns. And I have taken the same prices. A head office sends goods to branch at cost plus 80%. That means cost is 100, cost plus 80% will be equal to 180. And goods are sold to the customer at cost plus cost 100%, so at the price of 200. If you remember, once we have the three prices, I told you so many times and at great length of depths in the class. First of all, you write cost price, then you write your wholesale price, then you write your list price. Take the difference of cost price 100 and invoice price, that is equal to 80. Now 80 divided by 180, 180 is invoice price. That means 80 divided by 180 means 4 by 9. Is it clear to you? Because in the numerator you have taken into account the difference between the cost price and list price, cost price and wholesale price. And in the denominator, you have written what we call invoice price or wholesale price. Now this price, it is known as rate of loading on wholesale price or invoice price. to convert the wholesale price into cost price. It means if we are going to apply this rate on an item which is at wholesale price, first of all, you can apply this rate only to an item which is given at wholesale price. Is it clear? Number one. Number two, if you are going to apply this rate on an wholesale price, that item will get converted into cost price. This is the point which you need to understand. Then another rate, we will take the difference between invoice price now and list price. This difference is list price, invoice price is 180, list price is 200. The difference is 20 by 200, 1 by 10. Because in the denominator I have written list price, this is rate of loading on list price to convert list price into wholesale price or invoice price, because we have taken the difference between the list price and invoice price. Is it clear to you or not? There could be another rate. For example, our cost price is 100 and list price is 200. Now, if I take the difference 100 and divide it by 200, this is also rate of loading on list price, because in the denominator list price is written. But this difference is related to cost price and list price. So it means if I am going to apply it on an item which is at a list price, that item will get converted to cost price. This is how actually I told you to compute the what we call rates, if you remember. Is it clear to you or not? So calculation of rate is very important in order to solve these questions. Is it clear to you? So I have already here computed the rates. We know that in order to convert invoice price into cost price, we will apply a rate of 80 by 180 or 4 by 9. I have also written here. Similarly, if I take the difference between 180 and 200, that will be equal to 20 by 200 or 1 by 10. But it means because in the denominator there is a list price and this difference is between list price and invoice price, it means if I am going to apply this rate on an item which is at a list price, that will get converted into what we call invoice price. And the third rate, cost price and list price, difference is 100 by 200, 1 by 2. It means if you are going to apply this rate on an item which is at a list price, that will get converted into your cost price. Is it clear to you? Now, in order to solve such question, first of all, in the books of the head office under wholesale branch system, you will have to prepare head office trading and profit and loss account. That is why it is also known as final system. Is it clear to you? Here, first of all, you are going to write, and remember one thing, trading and profit and loss account is always prepared at cost price. You are going to write opening stock which is available with the head office. This is the column of head office. Head office has purchased some goods, you are going to write it on the debit side. Important item is here it is written goods sent to branch at invoice price. That means this year or in the current year, head office has sent 90,000 worth of goods to branch office. Obviously, because we have sent the goods now, we are going to write it on the credit side. Goods sent to branch account at wholesale price. But we have sent these goods and we know that these goods are at wholesale price or invoice price. But I am not going to take the loading out of it. Why? Because if I am sending the goods to branch, I will presume that ultimately these goods will be sold. And we know that with respect to sales, we never do any loading. So on such presumption that ultimately these goods will be sold, I haven't done any what we call loading at this particular moment. Is it clear to you? Now, these are the items which are given over here I have written. Now here it is written in the column of head office sales. That means head office has also done some sales. If it is not given in the question, I told you, it will always be presumed that goods are sold to the customer. Goods are sold to the customer at wholesale price, because head office can sell the goods to the customer at any price. They can sell the goods to the customer at wholesale price or also at list price. If nothing is mentioned in the question, always presume goods have been sold at list price. Although this is mentioned, and most of the time it will be mentioned in the question. Sales at head office are made at wholesale price. It means whatever sales are done by head office, these are done at wholesale price. Anyway, so try to understand. Head office has sent 90,000 worth of goods, and they have also sold to customer 2,70,000 worth of goods. Both these items are at wholesale price. Is it clear to you? But importantly, these are actual sales, and we are not yet sure how much of these goods will be sold by the branch, because we have sent 90,000 worth of goods to the branch office. Is it clear to you or not? But anyway, the first thing is that you have to find out the closing stock. Now, in order to find out the closing stock, as I told you, first of all, you are going to write opening stock, but this time opening stock is not given in the question. Correct? Here it is not given. In fact, opening stock 20,000 is given, I am sorry. So first of all, you are going to write opening stock. Correct? Then you are going to add the purchases. This will tell you total amount of goods which are available with you. Now, total amount of goods which are available with you in this particular question is equal to 2,20,000. Opening stock plus purchases. Obviously, these are at cost, because any item which is given under the column of head office will always be presumed at cost. That means this is the total cost of the goods which we have at our disposal. Importantly, now I will have to subtract out of 2,20,000, what is the cost price of the goods which we have sold out and which we have sent out. Now see here, goods sent to branch. I have written here cost of goods sent to branch. 90,000. You know that head office has sent 90,000 worth of goods to the branch, and these are at wholesale price. I want to know the cost price, so I will have to apply the rate of 4 by 9. That is 40,000. That means the goods which we have sent, actually their cost price is 50,000. So out of 2,20,000, 50,000 worth of goods have been now sent out. Similarly, we have sold 2,70,000 worth of goods, and their wholesale price is 2,70,000. To know their what we call cost price, I will have to apply the rate of 4 by 9. That will be equal to 1,20,000. It will tell me that 1,50,000 worth of cost of goods have been sold by us. So out of 2,20,000, 50,000 worth of goods costing we have sent, and out of 2,20,000, 1,50,000 worth of goods have been sold by us. That's a different matter. We sold them out for 2,70,000. So that means out of 220, 50 and 150, if I am going to subtract, I will be left up with 20,000. This will tell me actually the total closing stock. Now we have got the total closing stock. That will, now I will take the, I will balance it. I will find the gross profit. And to be very honest with you, this gross profit is nothing, but it is the loading. For example, 90,000 worth of goods, these are the wholesale price, and the loading on it at the rate of 4 by 9 is equal to 40,000. Similarly, 2,70,000 wholesale price worth of goods. Correct? Their loading is equal to 120. If you are going to add, you will get 1,60,000. That means gross profit which you are getting is nothing, but it is the loading on the total sales. 90,000 worth of goods which you have sent, you are presuming it that these goods will be ultimately sold by the branch, and 2,70,000 is the actual sales done by the head office. So out of total 3,60,000, total wholesale price is 3,60,000, and loading is equal to 160. That is nothing, your gross profit. So you write your gross profit here. Now the main question is, we see here, I told you this 1,60,000 gross profit comprises of 40,000 worth of loading on 90,000 and 1,20,000 worth of loading on this. But point is that this profit is realized because these are the goods which have been actually sold out. But problem is with respect to this 40,000. Why? The reason is that we are not very sure that 90,000 worth of goods which we have sent, whether those goods will be sold out by the branch or not. That is the question. So finally we will come to know actually, and how we will come to know I will tell you. Finally we will come to know ultimately at the end of the year that out of 90,000 worth of goods which we sent out to branch, how much of goods are still left up with the branch. Because we have taken on the credit side, when I am writing here 1,60,000, indirectly it means I am writing 40,000 of loading on 90 and 120 loading on actual sales. Indirectly, this 1,60,000 is profit, but it is not correct profit. Because we are presuming that 90,000 worth of the goods will be sold, and I have taken their profit element in this 160. So at the end of the year, we will find out first of all the total amount of goods left with the branch. How we will do that? For that, see here, you will have to do another working. You will first of all find out What is the wholesale price of the goods which you sent? 90,000 worth of goods you have sent. Then you will take account the sales actually done by the branch. It will be given in the question. Here in the column of the branch, there is only one item, sales. That means actual sales done by branch is 90,000. So 90,000 is actual sales. 90,000 is actual sales. Some of us may tend to think that there is no closing stock. Don't commit this mistake. Actually, branch has sold the goods at list price, whereas this is the wholesale price. So somewhere in your rough, you simply write 90,000 is wholesale price. Sorry, list price is 90,000. I want to know what is the wholesale price of these goods. So in order to convert wholesale price into list price, we will take the difference, which is 20, and I will divide it by 200. That is 1 by 10. So I will come to know that 9,000 is the loading and 81,000 is the wholesale price. That means out of 90,000, 81,000 worth of wholesale priced goods have been sold at 90,000. Is it clear to you or not? So this way round, you will come to know that branch is left up with 9,000 worth of goods. This is the most important part. That means out of 90,000, only 81,000 worth of goods have been sold by branch, but 9,000 worth of goods haven't been sold. So that means there is some profit which is unrealized, because we have written here entire loading of 40,000, but 9,000 worth of goods have remained unsold. So that is why now what I am going to do, I am going to write on the debit side unrealized profit. See, I have written unrealized profit on part of goods sent to branch remaining unsold. 90,000 worth of goods were sent, 9,000 remain unsold. Now you simply apply the rate 4 by 9, find out the unrealized profit. Now you will find your correct profit. This is how you have to do the questions related to wholesale branch. These are the topics where you need to actually stress upon as far as this particular chapter is concerned. Now coming over to independent branches, because we have done lots of questions under independent branches, but you need not require to do anything. You simply actually do the questions related to entries which we have done in the class, correct? Only questions related to entries. You need not require to do interbranch transactions or something like. Regarding what we call foreign branches, we have done lots of questions, correct? Regarding foreign branches, you need to understand that foreign branches, first of all, are of two types. Integral branches, number one, correct, and non-integral branches. Integral branches means the branches which are dealing in the same line of goods. Non-integral means they may be differing. They may be what we call selling goods different from the one which are produced or sold by the head office. But unless and until nothing is mentioned in the question, always presume that integral branches, the question is related to integral branches, but it is not going to have any difference. Remember one thing. Importantly, what you are supposed to do under such question, you need to understand the rules of what we call transporting the items into home currency, correct? For example, we have a branch in USA. We are the head office in India. Our reporting currency or home currency is rupee. And of course, our branch is, let us say, in USA, and their currency is dollar. So branch has given us some trial balance. Obviously, this trial balance is in dollars. So what we are supposed to do, we have to actually translate it into what we call home currency. And for that, you need to know the rules. If you remember, I told you, all the items of profit and loss account, that means expenses, purchases, sales, all these will be converted by using the average rate, correct? Opening stock, although it is an item of P&L, but it is converted on the basis of opening rate. Is it clear to you? Closing stock is converted on the basis of closing rate. All items of balance sheet are generally converted, debtors, creditors, correct, generally are converted on the basis of closing rate. Regarding fixed asset, we have to be careful. Fixed asset will be converted on the basis of that rate which was prevailing on that date on which we had purchased the asset. Under integral branches, fixed asset will be converted on the basis of the rates. We call it date of transaction rate. Is it clear to you? But if the branch is non-integral, in that case, fixed asset is converted on the basis of closing rate itself. So this is the only difference. Correct? For example, we are being given, let us say, branch, some items of the branch trial balance. The Indian company that been head office is in India and branch is in Washington, and this is the trial balance prepared by the branch. On the basis of this, now I will have to convert. When I am going to convert, first I am going to write the items which are given to us as it is. As it is. Correct? The first two columns are nothing but questions. Now we should know that fixed asset 51,000 is given. So fixed asset. So here in the question you will be given what was the rate when you had purchased the fixed asset. For example, in point number 3 it is given that on 1/4/2021 when fixed asset were purchased, the rate of exchange was this, 60. So you simply multiply 51,000 with 60 to get it converted into what we call rupee. So you are translating the trial balance into reporting currency. Opening stock, I told you opening rate given in the question 63. Purchases, item of P&L, you will apply average rate. Correct? Sales, you are going to apply what we call average rate. Important item is with respect to goods sent to branch. For example, here it is given goods sent from head office 34,000. But its value will be given. This is in terms of dollar. Because head office has sent some goods, it is given in the question itself that head office sent goods to the branch for rupees 15 lakh. So you need not require to apply any rate. You simply write goods sent from head office 34 and you simply write its corresponding figure. Is it clear to you? Carriage inward and other expenses on the basis of average rate. Debtors, you will apply closing rate. Creditors, you will apply closing rate. Cash at bank, you will apply closing rate. And then it is given in the question head office account. Head office account in the column of the branch. On the credit side, we are given head office account. What does it mean? It means branch is supposed to pay to the head office $46,000. There are two items where you need not require to apply any what we call exchange rates. Is it clear to you? Now, in this case, again it will be given to you that head office books show that we have to take 20 lakh. Branch is saying we have to pay $46,000 and we are claiming we have to receive rupees 20 lakh. So that means value of 46,000, you write 46,000 and you write corresponding value 20. This is how you are going to translate. Important point is that then you total it up. For example, if I am going to total it up, the credit side total is 132 lakh 59,000. Similarly, debit side total is this much. The difference will be debited to profit and loss account. It is known as exchange loss. In case if credit side will be higher, there will be a loss. If credit side will be lower, it will be a gain. Is it clear to you? That gain will be transferred to profit and loss account in case of integral branches. In case of non-integral branches, it will be transferred to foreign currency translation reserve. But you are not going to get such question. You are going to get simply questions where you will be given some items and you will be asked to convert them into what we call rates. Is it clear to you? You will be given 3-4 items. You will be given the exchange rate in the question also, and you will be asked to convert them into reporting currency. So this is all you will have to do as far as branch account is concerned. Is it clear to you or not? I hope. Now I will tell you some important questions which you are supposed to do. I've already told you that topics, for example, first 3 topics, data system, stock and data system of paramount importance, correct? And wholesale branch system. From what we call dependent branches, you need to require to waste your time, simply do the question related to entries and foreign branches, correct? First, in the regular classes, I have written some theoretical notes wherein I have given you actually what exactly integral branches, non-integral branches, you need to know that. And you need to know also the rates which we are going to use to actually convert the items into reporting currency. This is what you are supposed to do. Is it clear to you or not? Well, this is branch account. After that, we are going to actually do your foreign branches. Your next chapter, hire purchase. Is it clear to you? So now in this particular session, we are going to quickly revise the concepts with respect to hire purchase system. This is another very lengthy chapter, isn't it or not? So which are the focus area we are going to talk about, but before that we are going to actually take into account all the what we call concepts. As you know, when I begin the chapter in the regular session, first of all I start with what we call calculation of interest. This is exactly what I am going to start off with this. So as you can see in this particular question, just a quick recap actually. Now in this case actually it is given that a company has purchased a motor car from the Bombay Motors paying higher as per the hire purchase agreement, and it was decided that they are going to pay 10,000 as the down payment and further 3 installment. Down payment happens to be 10,000 and then 3 installment of 10,000 each. Correct? That means total hire purchase price, down payment and total installment will be equal to 40,000. 3 installment of 10,000 each. And further it is written that the cash price of the car. Now this is the cash price. As you know, what is cash price? Cash price means if I would have had paid entire amount in lump sum, I would have paid 37,250. Cash price is not the cost price. If the shopkeeper is going to sell me what we call an item for a particular price, he will obviously charge some profit. Cash price means if you would have paid the lump sum money. But here you are taking the time facility and you are going to pay 40,000. Indirectly, you are paying an interest of what we call 2,750 because you are going to pay the entire amount, what we call in 3 years. Isn't it or not? So the first thing which we are supposed to do is to know actually, because we have paid a down payment, no doubt about that. After that, each year, at the end of the year, I am supposed to pay 10,000, 10,000, 10,000. So the most important point is that whatever installment which I am paying actually, what exactly is the interest out of that installment and what exactly is the portion which I am paying for the cash price. Is it clear to you or not? This is exactly is the theme of this particular chapter. So first of all, as far as calculation of interest is concerned, you are going to write here, correct total cash price, you subtract the down payment. In fact, your down payment is 10,000. Actually, your down payment is also known as zero installment. Correct? Zero installment, 10,000. Because it is the down payment and you have paid it the moment you acquired the asset, so no question of any interest. That means this entire 10,000 which you are paying is for the cash price portion. After subtracting the down payment, you are going to get a balance of 27,250. Now you will move over to the end of the first year. First of all, you are going to write here the amount of installment, which is 10,000. Now, you find out the rate of interest which is given to you in this particular question, 5%. So you apply 5% of 27,250 to find out the interest. Now, out of 10,000, this is your second thing. Now, you subtract interest from the 10,000, you will get what we call what amount which you have paid against the what we call cash price of the asset. Is it clear to you or not? So, it will tell you that out of 10,000, actually payment for asset is 8,638. To be very honest with you, this is your capital expenditure and interest is your revenue expenditure. Is it clear to you? So anyway, so 27,250 was the balance for the cash price. Now, 8,638 you have paid for the asset. So the balance of the cash price is 18,612. Now you will reach the end of the second year. Now again you are going to write what we call installment 10,000. You will compute the interest on 18,612 into 5%. Interest will be 931. You subtract 931 from 10,000, you get 9069. You subtract it from over here. Then in the final installment is 10,000. Correct? Actually, in the final installment, you need not require to compute the amount of interest. Correct? 9,543 is the balance. So you presume that out of 10,000, you are paying 9,543 for the cash price. So the difference of these two will be equal to 457. That will be interest. So after the end of the third year, this account will get closed. This is how you used to compute what we call interest. This is also known as gross installment method. Under gross installment method means because your hire purchase price is higher than the cash price. That means the installment is inclusive of interest. Correct? Now, this is a case of pure installment. Pure installment means in the installment cash price is not included. For example, suppose here it is given that cash price is 20,000. Now cash price is 20,000. It is written that I have to pay 8,000 as the down payment and balance in 3 annual installment of 4,000 rupees each plus interest. So that means this time installment which is given to us is not inclusive of interest, because it is given that installment will be 4,000 plus interest. That means this portion is not inclusive of interest. So that is why it is known as a case of pure installment. So in this case, and rate of interest is 5%. Actually, methodology will remain same. First, you write the cash price, you write the down payment, you get 12,000 as the balance payment. But because when we prepare the table, we write here gross installment, and we do not know the amount of gross installment is still. So first what you do, actually now you compute the amount of interest. Your interest will be 12,000 into 5%, 600. And you add 600 to 4,000, you will get what we call your installment. And your cash price portion will be 4,000, no doubt about that. You subtract 4,000 from here, your balance will be 8,000, and you repeat the process. For example, in the next year, at the end of the year, you first compute the interest, that is 5% of 8,000, and then you add it to 4,000. Your gross installment will be equal to this much. Your cash price portion will be equal to this much. You subtract and so on. So this is how under pure installment method you are going to compute the interest. Third case was when rate of interest is not given. Sometimes rate of interest will be missing in the question. So under such question, first of all, what you are supposed to do, for example, here it is given that we purchased an asset having a cash price of 15,500. And order of the payment is as follows. We have to pay 3,000 on signing agreement plus 5,000, 5,000, 5,000, 3 installment. Now total hire purchase price is 18,000. Total cash price is 15,500. So difference 2,500 is interest. But problem is that rate of interest is not given in this question. So under such circumstances, under the first step, you compute the amount of total interest. Once you are done up with that, now what you are supposed to do, you simply actually write here total hire purchase price, which is 18,000. Subtract the down payment. Then this will tell you outstanding balance. This is your first outstanding balance. You subtract the what we call second installment. This will become your second outstanding balance. Then similarly, you will get the third outstanding balance. Now, whatever outstanding balances are there, 15,000, 15,000, 10,000, and then third outstanding balance. So 15,000, 10,000. You write the outstanding balance 15,000, 10,000, and 5,000. You compute the ratio 3:2:1. Now, total interest as we computed under the first step was 2,500. You divide this interest in the ratio and you will get what we call interest, which will be included in the first installment, and similarly 834 and similarly 416 will be the interest of the third installment. This is how you are supposed to compute the interest. Is it clear to you or not? And sometimes the cash price is not given. This is also important. When cash price is not given. For example, suppose you are buying a particular asset and you are paying 10,350 as the down payment, and you are supposed to pay 3 installment of 19,965, 19,965, 19,965. And your rate of interest 10% is given. I've already told you this 10% rate of interest which is given to us is always on cash price. What does it mean? It means if my cash price is 100, so my interest will always be equal to 10. If my interest will always be equal to 10, that it means my rate of interest on higher purchase price will be 10 by 110. This is the first thing which you need to do. Now, another important point is that this is the first thing which I have done here. Is it clear to you? I have converted the rate of interest which is generally given to us on cash price into rate of installment on higher purchase price, or sometime it is also known as rate of interest on installment. Is it clear to you? Importantly, you have to pick the last installment first. Your last installment is 19,965. That means the third installment, I have written here, installment in reverse order. So third installment will be written first. You apply this rate 10 by 110, you will get the interest. You subtract this 1815 from 19,965 to get your cash price portion of the first installment. Similarly, your second installment. So your second installment is also of 19,965. Now, in order to compute the interest of this installment, first you write this installment and add 18,150, the cash price portion of the what we call earlier installment. Is it clear to you? Logically, it is next installment because you are talking about what we call second installment. So obviously, this is the third installment. But anyway, so you write 18,150, add them, apply the interest rate, you get 3465. You subtract 3465 from 19,965 to get this one. Similarly, you repeat the process and get the what we call cash price portion of the third installment. Don't forget to write the zero installment, that is down payment. Of course, there will be no interest in it. Now, if you are going to add all this, you will get the cash price. Is it clear to you? So this is what we call your rate interest related question. As far as questions in the examinations which you are going to get, to be very honest with you, you will not be asked to actually prepare the ledger accounts. Of late, what we have seen actually, they are simply asking you to compute the value of the asset or loss or something like that. But anyway, first we will talk about the full repossession. Now, in this case, what is happening, full repossession case, let us say F2 purchased a machine from F2 for 5,60,000. We have purchased a machine for 5,60,000. Well, it is also written that payment which we are supposed to make 1,50,000 as the down payment and three installment of 1,50,000. 3 installment of 1,50,000. Further, it is given F1 is the purchaser. Purchaser's rate of depreciation is also given. That is actually 10% on written down value. Because of financial constraints, F1, after having paid down payment, he paid the down payment and the first installment at the end of the first year, could not pay the second installment, and he did not pay the second installment. Obviously, we know that as per Hire Purchase Act, if the purchaser is going to make any default, in that particular case, the seller or the vendor has got the right to actually repossess the asset, which he did. The seller actually took back the asset. This is a case of full repossession because only one asset was sold, and when the default was created or committed, he took back the asset. So under this, first of all, and remember one thing, in this question, rate of interest is not given. Your first step should always be to compute the interest. In order to compute the interest, as I told you, when rate of interest is not given, you will take the total hire purchase price, which is 6 lakh. Down payment plus installment. You subtract the cash price, which is 5,60,000. So 40,000 will be your interest. Now, as I told you, your total outstanding amount, in the first column you write the total hire purchase price, subtract the down payment, you get what we call outstanding amount. Then you subtract the first installment, you get this. So items which have been written in bold are actually your balances. Is it clear to you? Outstanding balances. You take the ratio of the outstanding balances, which comes to 3:2:1, and now you divide the interest of 40,000 in the ratio of 3:2:1, which will be 20,000, 13,333, and 6,661. Now, in the books of F1, the purchaser, how we are supposed to prepare the account? First, I am going to write hire vendor account, correct? The person from whom I have bought the asset. Because we bought the asset in the beginning of the year, so I will write machine account debit to hire vendor account. And it will always be written with the cash price. Your cash price is 5,60,000. On this date, you are going to make a down payment. You are going to write here to cash 1,50,000. When you will reach the end of the year, you will write the interest. Entry will be interest account debit to hire vendor account, 20,000. Now you are going to make a payment. Whenever we write in the ledger accounts, we always write the gross installment. The gross installment is 1,50,000. Now I will get the balance. Now second year, I will start with balance brought down. 2,80,000 will be brought down. Then I am going to write here again the interest. I will reach the end of the year. I will write the interest because that means interest has become due now. Isn't it or not? But unfortunately, I was supposed to make the payment, but I could not make the payment. So that means default has been created. So now I will balance it. So it means the purchaser has taken back the machinery at this value, the balancing figure which you are getting. That means he took back the machinery at 2,93,333. Now you can prepare the machine account to find out loss or profit. When we prepare the machine account, because here we have written 5,60,000, I will cross it over. I will write here to hire vendor 560. At the end of the first year, I will charge the depreciation. Balance will be 5,04,000. Now this 5,04,000 I will write balance brought down in the beginning of the second year. And at the end of the second year, I'm going to write here depreciation 50,400. And then I will cross this amount here, because here I have written 2 machines. So here I'm going to write 2 hire vendor account, 2,93. The balancing figure will tell me the amount of loss incurred by me. Is it clear to you? Now suppose generally question will not ask you, but in case if the question asks you to prepare the ledger account in the books of the what we call hire vendor, so hire vendor will prepare the hire purchaser account. And all the items which are appearing in this account, in the first account on the credit side will appear on the debit, and all the items which are appearing on the debit will appear on the credit side. For example, now you presume you are the seller. You have sold the goods. So you will write purchaser account debit to hire sales 560. You will receive the down payment. You are going to write it on the credit side. Then you will pass the entry for due. So due, when interest will become due at the end of the first year, hire purchaser, who is your debtor, because you are the seller. You have sold the goods. You will write debtor account debit to interest account. Now you will receive the first payment. Balance will be this much. You will write balance brought down. Similarly, at the end of the second year, you will pass the entry for interest due. You were supposed to receive second installment, but you did not receive. So now you took back your asset. This is how you are going to prepare the account in case of full repossession. Is it clear to you? But unfortunately, generally in the examination, you will not be asked questions related to full repossession. Generally, you will be asked questions related to partial repossession. And from the partial repossession, you can expect a sure question. That means from this particular chapter, I will tell you which questions you need to focus upon. From partial repossession, you can do either question number 3.5, one question. You can do, actually question number 3.5, 3.4 are more or less same question. And you can do any one question further. At least 3.5 you should be doing, and 3.4. At least 2 questions you must do with respect to partial repossession. Now, in order to understand the partial repossession, now whenever the question will be of partial repossession, to be very honest with you, you won't be asked to prepare the full-fledged accounts. You will be asked to do some calculations, correct? For example, in this case, purchaser is Mr. X. And he purchased 3 machines. How many machines? 3. 3 machines. Costing 1,50,000. Their cost price is 1,50,000. And he purchased it on hire purchase system on 1/1/2027. On 1/1/2027, you purchased the machine. Payment was to be made 90,000 down payment. 90,000 you were supposed to make the payment. And remainder in 3 equal installment on 31st/12/2027, 31st/12/2028, 31st/12/2029. 3 installments you are supposed to make of 1,50,000, 1,50,000, 1,50,000. Is it clear to you? Now here it is written very clearly, together with interest. Together with interest, it means this time your installments are pure installment. These are pure installment, that means interest portion is not included in it. Is it clear to you? Further it is written, X company writes off depreciation at the rate of 20%. Now your rate of depreciation is 20% on written down value or reducing balance method. X company paid the installment due at the end of, that means you paid the down payment, you made the payment on 31st/12/2027, but you did not make the payment on 31st/12/2028, that means second payment. Now question says that Y company, now seller or vendor are one and same thing. Now vendor happens to be in this particular case Mr. Y. Now what vendor did? He left 1 machine with you, while company agreed to leave 1 machine with the purchaser, adjusting the value of the other machine. That means he has taken back 2 machines. 2 machines have been repossessed. Is it clear to you? 2 machines have been repossessed, and 1 machine is with the buyer. 1 machine is with buyer. That is very important. Is it clear to you? Importantly, because he is taking back the machine, it is written that machine was valued on the basis of 30% depreciation annually. So on the basis of 30% depreciation, because seller's rate of depreciation may be different from your rate. Your rate is 20%, but his rate of depreciation is 30%. So generally in this sort of question, actually, you will be asked, correct? What is the value of the machines repossessed? What is the value of the machine which is left with the buyer? So generally, you will be asked to do only the workings. You will not be asked to prepare the ledger accounts. But first of all, as usual, in order to solve the question, the first step is very important to compute the interest. Now your cash price is 4,50,000, you subtract the down payment 360. But as I told you, it is a case of pure installment. So first you compute the interest. The rate of interest is given in the question as 9%, as we saw earlier. So 9% of 3,60,000 is 32,400. You add this amount to your what we call installment. Your installment was 1 lakh. What was the amount of installment? Gross installment will be, now this will be 1,82,400. Sorry. Is it clear to you? 1,50,000 plus 32,400. So anyway, whatever it is, actually you do one thing, because otherwise you make the installment amount as 1,20,000 each. Just wait. If I will make it 1,20,000, what we have taken here, just wait. Okay, do one thing, leave it as 1,50,000. So your interest is 1,32,400. Just rectify this figure, no problem. Because basically we are interested in computing the interest. Similarly, when we are going to charge the interest, we are going to charge the interest 2,40,000 into 9%, and similarly we are going to charge the interest. Is it clear to you? Once we have computed the interest, now the next point in this particular question is, in case of partial repossession, after having computed the amount of interest, now the next question is, what is the value of the goods repossessed? Seller has taken back 2 machines out of 3 machines. But you will have to compute the value from the angle of the vendor and buyer both. This is vendor and this is buyer. First of all, you will write what we call cost price or cash price. Now cash price of one machine is 1,50,000 into 2, that will be equal to 3 lakh and 3 lakh. Is in both the columns, you will write 3 lakh. We are computing the value from the viewpoint of the vendor and from the viewpoint of the buyer. Now, because the vendor's rate of depreciation was 30%, he will charge the depreciation for the first year. Correct? 90,000. His rate of depreciation is 20%. He will charge what we call at the rate of 20%. So balance of the machinery at the end of the first year from the respective viewpoints is 2,10,000 and 2,40,000. But how long you will have to charge the depreciation? You will have to charge the depreciation till the point of the default. Now default has been created at the end of the second year. So you will charge the depreciation for the second year too. So depreciation you will charge, then you will find what we call the value of the machinery. That means the value of the machinery which was repossessed. The seller is considering this machinery worth rupees 1,47,000. But from the buyer's perspective, the value of the machine is 1,92,000. So that is why it will be considered as a loss to the buyer. You will take the difference of these two items, that will be equal to 45,000. Similarly, question may ask you to compute what is the value of the machine which is left with the buyer. Now buyer is left up with one machine. Cost of one machine is equal to 150. Buyer's rate of depreciation is 30. He will charge depreciation on reducing balance method. So at the end of the second year, you can say value of the machinery which is still with the buyer is equal to 96,000. Is it clear to you or not? Although I have given the question in a complete solution manner, but from the examination point of view, you will be asked only the working portion from this particular topic. Is it clear to you or not? So full repossession is very important as far as this topic is concerned. Is it clear to you or not? Now, as far as hire purchase trading and data system is concerned, to be very honest with you, I have explained this one at great length. I've explained this. two topics, full repossession and this topic you must do this topic thoroughly. You won't be able to understand if I will simply tell you at this particular moment. Is it clear to you? Because you need to understand the concept of this. And you won't be able to understand the concept unless you will see the class. So only thing is that from this particular portion, you must actually go through the regular class and watch it out once again. From rest of the chapters, you can be selective. From this part, you cannot be selective. You are bound to get a question out of this. So that is why you have to do this particular part in full, and for that, you will have to refer to your regular class. Is it clear to you or not? Because as you know, under this, we used to prepare 3 accounts. I told you, one is stock in shop account, also known as stock in godown account. It is always prepared at cost price. Then besides that, we used to prepare hire purchase stock account. Hire purchase stock account is also known as goods sold on hire account. Goods sold on hire account. Is it clear to you or not? Or goods with customer account also. Besides that, we used to prepare hire purchase debtors account. Hire purchase debtors account, also known as installment due account. Is it clear to you? We have explained all this topic at great length, and you will be able to understand only once you will go through the initial concept of this particular part. So it cannot be simply revised this way around. Is it clear? So first of all, we will write here the opening stock which is given as you can see, stock in shop account. Then I will write 25,000 as the closing balance. Then overdue installment. Overdue installment means the balance of the debtors. So in the debtors account, you will write 2,000, 3,000 opening balance and closing balance. Then goods with customer in the beginning. So goods with customer refers to hire purchase stock account. This is the opening balance. Purchases, it is given 64,600 purchases will be written in the stock in shop account. Installment receipt means you have received amount from the debtors, you are going to write it in the debtors account. Now first of all, you are going to close the stock in shop account because it has caused the highest number of entries. So you will get the balancing figure. This figure shows that in the current year, you have sold 69,600 worth of goods whose cost price is 69,600. You will post this item obviously in the hire purchase stock account. You will post this, but problem is that it is at cost. You will have to convert it into what we call selling price. For that, you will have to keep into account the rates. Now rates are given 25% on cost. So rate of profit on cost will be 1/3 and on selling price it will be equal to 1/4. Now because in this particular question, this is cost. I want to convert it into selling price. I will have to add 1/3 to this. So I will get goods sold on hire. Now this will be at hire purchase price because stock in a hire purchase stock account is always prepared at hire purchase price. We have now 3 entries, this entry, this entry, this entry. So I will balance it. I will get the closing stock. So closing stock of that is hire purchase stock account closing balance is 62,000. And similarly, now I am going to actually Wait. This account has got only 2 entries at this moment, correct? And this account has 1 entry, 2 entry, and 3 entries. So this account will be prepared first. I told you the account which is having more entry will be prepared first. So you will get this balancing figure. It will told you installment due during the year. So now you will transfer this amount here, installment due during the year. Now you will tally this, you will get 62,000 as the closing balance. Is it clear to you or not? Now you have got the closing balance 62,000. Once you have prepared this account, now you can solve the question either through hire purchase trading account or through what we call hire purchase stock account. If you want to solve this question through stock account, you will have to prepare an extra account, that is hire purchase adjustment account. Here you have to take into account only the loadings. For example, you will write here stock reserve. Stock reserve means loading on opening stock of hire purchase stock account. Now 36,000 into 1/5 will be your loading. Similarly, you will write here loading on closing stock. And similarly, you will write here loading on goods which you have sold out in the current year. The difference will give you profit. Actually, it is easy to find out this way. But if you want to find out the profit through hire purchase trading account, in that case, important, first you write opening balance of hire purchase stock account and opening balance of hire purchase debtors. Of course, you will have to take the loading also. Similarly, you will have to write the closing balances. closing balance of hire purchase debtors is, I haven't written here, the closing balance is written here, hire purchase stock and debtors. Is it clear to you? Opening and closing balances will be written. Now, how much goods you have sold in the current year, you are going to present it. So, goods sold during the year. Goods sold during the year where we have written. Here we have written 87,000. Is it clear? Don't forget to take the loading of this item, and this item. You put the loading on the opposite side. Regarding one item, you have to be careful regarding installment received. You will get the same amount of profit, 12,200. This is generally how we do this question, but the important thing is still I'm advising. This is not the end of this one. You must go through the regular class session once again, go through the first lecture which I have already taken with respect to hire purchase trading and data system. Then you will understand this concept quite well and you will acquire proper efficiency. Very important topic, this one. Is it clear to you? So any two questions you can do out of this to get yourself prepared for the examination. You can do 4.5, correct? You can do the question which I did. So this is how you can prepare hire purchase, what we call installment. Is it clear? So now we'll pick up departmental accounts as far as this ballistic revision is concerned. You know, actually, as far as this particular chapter is concerned, here the problems which we may have to confront are generally related to problems concerning with the allocation of the expenses. These are pretty simple one. And problems relating to computation of departmental, then commission, and then what we call problem related to, you can say, unrealized profit. So interdepartmental transfers. Now I will tell you which are the topics which are very important, but first pay attention. Simple allocation expenses, honestly speaking, you are not going to get some question here. Mostly what you will be given some information with respect to what we call departmental expenses, and departmental data will be given to you. For example, there are two departments: opening stock, purchases, sales return, closing stock, wages, salary. All these items have been given to you in a segregated manner. For example, wages 80,000 for department A, 60,000 for department B, similarly 40 salaries and 25,000. However, the problem arises actually with respect to some items which are given in a common manner. For example, other common expenses are given to you like rent, electricity, depreciation, selling expenses. So only thing is that you need to know actually how you are going to allocate these expenses. For that, you will be given some information in the question. For example, you will be given here light points. So that means electricity will be divided on the basis of this ratio, that is 18:9. That means 18 by 27 and 9 by 27. Similarly, depreciation, you will divide it on the basis of value of the asset. Now, value of the asset is 1,50,000 or 1,20,000. So you can take the ratio which will be equal to 15:12. And similarly, what we call, you are being given rent. So rent will be divided on the basis of area. You are being given that departmental area is 300 square feet and departmental area is actually 200. So that means you will simply actually write here, that will be ratio 3:2. So this ratio will be equal to 15:12. And of course, this is 18:9. So rent will be divided on the basis of what we call 3:2, as I told you, that is area. Electricity on the basis of light points, that is 18:9. Depreciation on the basis of 15:12, that is what we call value of the asset. And selling expenses will be divided on the basis of respective sales. Now, respective sales are 6,33,000 to 4,92,000. That means 633 is to 492. On this ratio, you are going to divide these expenses. Now, whatever other items are given, you can simply put it what we call as it is. For example, if suppose you are supposed to prepare here departmental trading and profit or loss account, the opening stock is given to us in a segregated manner. I will write here purchases are given to us in a segregated manner, wages are given to us in a segregated manner, sales are given to us in a segregated manner, and then closing stock is also given in a segregated manner. So I'm going to simply put it over here. I will compute the what we call gross profit. I will write gross profit here. Now, salaries are given to us directly, that means in an allocated manner. But rent, as I told you, I will have to divide it on the basis of the floor area, 3:2. So rent will be divided. Electricity expenses, you will have to divide on the basis of light points. And similarly, depreciation on the basis of what we call a value of the assets. and selling expenses on the basis of what we call your sales expenses. And this way around, you can get the net profit. So this is your first topic as far as this particular chapter is concerned, and all these questions are very simple. But you can, importantly, you expect this question 1.6 and 1.5. Generally, you will be given some item and you will be asked on what basis you are supposed to actually divide it. Coming over to the interdepartmental transfers. Interdepartmental transfers will not give us much problem if suppose Department A has transferred some goods to B. There will be no problem if it is given only this much. Or for example, it is given that B has transferred some items to Department A. It will not give us any problem. Are you getting my point or not? It will not give us any problem. When the problem will arise, I will let you know. But first, suppose if interdepartmental transfers are given to us, then what we are going to do? For example, in this question, we are given some informations, and the informations are like this. For example, we are given opening stock of Department A and B. We will simply put it. And simply purchases are given in a segregated manner. Similarly, sales are also given in a segregated manner. Wages are also given in a segregated manner. But there are various items, for example, rent and taxes, sundry expenses, salaries, lighting, heating, discount allowed, discount received, advertisement, carries inward. These expenses are not given in a segregated manner. So according to the information, I will have to divide it. And as far as furniture and fitting is concerned, as we know, furniture and fitting is an asset. I am not going to write it in profit and loss account. Machinery is also not going to be written. Debtors is also an item of balance sheet. So we are not going to actually touch these items, which will not find place in the profit or loss account. Are you getting my point or not? Furniture, fitting, machinery, debtors, creditors, capital accounts, drawings, cash at bank. All these items are related to balance sheet. You will not be asked to prepare balance sheet, but in case if you want to prepare balance sheet, you can write these items in the balance sheet. For example, furniture on the asset side, machinery on the asset side, debtors on the asset side, creditors on the credit side, capital account on the credit side, less drawings, and then cash at bank on the asset side. However, if there will be some depreciation on furniture and fitting and machinery, that depreciation will have to be allocated. Now, further in this particular question, as you know, it is given that internal transfer of goods from A to B is 42,000. That means this time A has given to B some goods worth rupees 42,000. Only this much of information is given. It is not going to pose us actually any problem. Is it clear to you or not? Similarly, it is given that items of rent, rates and taxes and insurance and sundry expenses and lighting and heating and salary and carriage are to be apportioned in the ratio of 2:1. So no problem. So all these items, we are going to apportion them. It is also given that advertisement expenses will be apportioned in the ratio of 1:1. Again, no problem. Discount allowed and discount received will be apportioned on the basis of sales and purchases. On the basis of sales and purchases. That means discount allowed will be apportioned on the basis of sales, and discount received will be apportioned or allocated or divided on the basis of purchases. Now here it is given depreciation at 10% on furniture and fitting. So you will compute the depreciation of furniture and fitting, and you are going to allocate 3/4 to Department A and 1/4 to Department B. Simple. And similarly, services, again here it is given, Department B has given to Department A services worth rupees 50,000. So it is a case of interdepartmental transfer, but it is not going to give us any problem because only this much of information is given that Department A has transferred some goods and Department B has transferred some goods. Is it clear to you? Some closing stock is also given to us. Now, when you are going to prepare the departmental trading account, as I told you, you need not require to worry about that because opening stock is given. You are simply going to write actually opening stock, correct? For example, opening stock, then purchases, then wages. These are given to us in segregated manner. I will write the sales. Now regarding transfer, because it is given that Department A has transferred 42,000. Actually, the figures in the table are given in thousands. So you should not write here 42,000. You have to write 42 only. So 42,000 worth of goods have been transferred. The department which is transferring the goods, you will write it on the credit side, this item, and you are going to write this item on the in the column of that department which is receiving the goods. Is it clear to you? Similarly, 50,000 worth of services have been given by Department B. So you are going to write it on the credit side of Department B, and because A is receiving, you are going to write it on the debit side. That's all. So you will get your gross profit, you write your gross profit. So all expenses Now rent and taxes, it was given in the question. You have to divide it in the ratio 2:1. Similarly, sundry expenses, salary, lighting and heating. Here it was given in the question that all these items to be segregated in the ratio of 2:1. For discount, you will have to take the ratio of the sales and you will have to divide the discount. Is it clear to you? Similarly, discount received on the basis of purchases, you will take the ratio of the purchases and divide it. And similarly, advertisement expense, it was given in the ratio 1:1. Depreciation, you compute the total depreciation, take 3/4 in the column of A, 1/4 in the column of this. And then you find out the net profit or net loss. This is how you are supposed to do this particular question. Is it clear to you or not? Now, another important point is interdepartmental transfer. That is very important. Interdepartmental transfer and unrealized profit. Interdepartmental transfers and unrealized profit. This is the most important topic as far as this particular chapter is concerned. You need to understand that from this particular topic, you can expect a question in the examination. Actually, in this case, what happens? For example, Department A has transferred 1 lakh worth of goods to B. So when I am going to prepare accounts, because A has transferred 1 lakh worth of goods, I am going to write here 1 lakh. And because B has received, so I am going to write it on the debit side of the B 1 lakh. No problem. If this information is only related to this part, it is not going to give us any problem. But suppose if the question says that at the end of the year, whatever stock is with B, we are not concerned. We are concerned with this fact that whatever goods which we had transferred to B, let us say out of that, 30% of goods are lying with B. That means at the end of the year, whatever goods which you had transferred to B, the closing stock of B comprises 30,000 of these goods. See, closing stock of B might be 5 lakh, 6 lakh, 7 lakh. We are not concerned. The important point is that whatever goods which you had transferred, out of that actually 30,000 worth of goods are lying with B. Now this will create problem. Because you had transferred the goods and out of those goods, some goods are still with B. So that is the reason actually. Now you will have to take, it will become a case of unrealized profit, because when you had transferred the goods at the time, whatever profit is there, you must have included it in your profit. So again, this item is appearing on the credit side. So otherwise the profit will get inflated. So important point is that if we have transferred some goods and some part of goods is left with the department to whom we had transferred the goods, then the problem related to unrealized profit arises. Now how to extract this? Later on when I am going to prepare profit and loss, this is trading account, this is profit and loss account. Whatever goods which are left up with B, see here, closing interdepartmental transfers of closing stock 30,000. With department B, there are 30,000 worth of goods which were transferred by us. That means this is closing stock of interdepartmental transferred goods. Now let us say profit margin is 1/5. Let us say when we send the goods, we charged a profit margin of 1/5. So I will compute 1/5 of that, 6,000, and this 6,000 will be written. This is department A, this will be department A. I will write here unrealized profit in the column of A, because it will be considered unrealized profit of A, because A had transferred the goods. This is the point which you need to understand. Is it clear to you? Under interdepartmental transfers, these are the points which we need to take care of. Is it clear to you or not? So this is how you are supposed to do these questions. For example, in this particular question, some information is given to us. Is it clear to you? Some information, for example, opening stock is given, purchases is given, sales, all this information is given to us in a segregated manner. Wages. Then here it is written closing stock of purchased goods. Closing stock of purchased goods and finished goods. Unrealized profit will never ever be computed on purchased goods. It can only be related to finished goods. Finished goods are also known as manufactured goods. Is it clear to you? Similarly, here it is written purchased goods transferred by department B, then by department A. Also, it is written finished goods transferred by department A and some finished goods have been transferred. We have to take care of finished goods. Is it clear to you? But just to make the point clear, for example, in this case, first of all, it is written transfer by department A to B. Department A has transferred purchased goods. Transferred by Department A. Department A has transferred 8,000 worth of purchased goods to Department B, and Department B has transferred purchased goods worth rupees 10,000. Correct? Then it is written finished goods transferred. Finished goods transferred by A to B is 35,000. And by B to A, finished goods transferred by B to A is 40,000. I have written this information separately just to make you understand better. Is it clear to you? That means total transferred by A, 8,000 purchased goods and finished goods worth rupees 35,000. Total transfers by B, Department B, purchased goods 10,000 and finished goods 40,000. But just to confuse you, in this particular question, it is also given return of finished goods by A to B 10,000. That means Department A has returned 10,000 worth of finished goods. Department A has returned because finished goods transferred by B were 40,000, but out of 40,000 A has returned. So you subtract the returns. So you can consider net transfer of finished goods as 30,000. Similarly, it is also given return of finished goods by B. So B has also returned some goods. A had transferred 35,000 worth of finished goods, but B has returned 7,000 worth of goods. So you take the net transfers. It is always better to take the net transfer. Carriage is also given in the question. First, after having a look over till up to this point, I am going to actually post these items. For example, I am going to write here opening stock, 92,000. Purchases, wages, then sales. Now coming over to the transfer goods. See, whatever goods transferred by A, 8,000 and 35,000 purchased goods. Transfer of purchased goods by A is 8,000. Transfer of finished goods is 28,000. That I am going to write over here. Is it clear to you? So A has transferred this much of goods. Is it clear? Net transfer I am going to write 28 and 8,000. These are the transfer made by Department A. Purchased goods 8,000, 28,000. The department which transfers the goods, you are going to write it on the credit side. But these goods have been received by Department B. So on the debit side of Department B, you are going to write here 8,000 and 28,000. Because B has received the goods in the column of the B on the debit side, you are going to write here. Correct? Similarly, we find that B has transferred some goods, 8,000 purchased goods, and net transfer of finished goods is 30. First, you are going to write it on the credit side of B. Then you write it on the debit side of A. Now you simply compute. Now closing stock is also given at the end of the year. Somewhere in the question, closing stock, here it is given with Department A purchased goods 4,500, finished goods 24,000. You simply write closing stock purchased goods, similarly closing stock of B. It is not going to pose any problem. Now you compute your gross profit. You write gross profit over here. And now, before you start computing the net profit, here it is given in the question, you are informed that purchased goods have been transferred mutually at their respective departmental purchase costs. It is given in the question that purchased goods have been transferred. Purchased goods have been transferred at cost. Because purchased goods were transferred at cost, so it is not going to give us any problem. And moreover, even if this line would have been missing or not given in the question, even in that case, you are going to consider that purchased goods have always been transferred at cost. So we never ever compute what we call unrealized profit on purchased goods. Further, it is given that finished goods are generally transferred at 25% over departmental cost. Finished goods are generally transferred by Department A to B and by Department B to A at a profit margin of 25% on cost. So you will compute, because rate is given on cost. Cost will be 100, margin will be 25, and your rate will be equal to 25 by 125, 1 by 5. This is the rate of margin, or this is the rate of profit, you can say. Is it clear? Now the most important line which is given in the question is 20% of the finished goods. 20% of the finished goods at each department represents finished goods received by other department. This is the problem which is going to give us. For example, at the end of the year, now you can simply directly have a look over here. For example, first I will write the total closing stock of finished goods with department A and with department B. Now question states that whatever finished goods which are lying with the respective departments, 20% of those goods are actually interdepartmental transferred goods. So you take the 20% of 24,000, 4,800. That means out of 24,000 worth of finished goods which are available with department A, 20% have been transferred by department B. Similarly, out of 14,000, 20%, 2,800 have been transferred by department A. This is the important point. Now you apply the rate. Margin is 960. Actually, this will be considered unrealized profit of B, and you take 1/5 of 2,800. It will be considered as unrealized profit of what we call department B, department A. Is it clear to you or not? So these unrealized profit, when you are going to prepare, you simply write net profit, gross profit, and then there are no expenses. You write here unrealized profit, correct? 560 and 960. We have written in the column of A 560. We have written in the column of B 960, or you can directly write this way. Is it clear to you? So your net profit ultimately will be equal to this much. This is how you have to do these questions. Is it clear to you? This topic is very important. Which are other important question in this case? See, in the previous question, it was given to us that profit margin rate. In the previous question, it was given to us that profit margin rate is equal to 1/5, because it was given in the question that generally department transfers goods to other department at 25% on cost. But sometime it may not be given. Sometime it will be given only this much, that department A has transferred some goods. It will be given, and it will also be given that there is some closing stock of those goods with the other department. So under such case, you may have to find out what we call profit margin rates. So in order to find out the profit margin rate, if you remember, first of all, you write the gross profit. That means you will have to compute the gross profit. And out of gross profit, then you simply write total sales. And then write here transfer of finished goods. Transfer of finished goods into 100. So this way you can find out the rate of margin also. Is it clear to you? Sometime you may have to find out the rate of margin. So from the examination point of view, which questions you have to do from this particular chapter, that is very important. 3.3, correct? This is very important. And then after 3.3, 3.4 is also very important. You need to do this question. So even if you are going to do these two questions, that means this topic is comprehensively over. So you need to actually stress very hard on this particular topic. But most important topic of this particular chapter is section 4. Calculation of corrected profits and manager's commission. Correct? These are very vital questions. And so many questions we have included in your regular classes, you must have seen actually, but this is very important topic and you must be able to do these questions. Is it clear to you? You need to focus very hard on these questions. So coming over to these questions, first of all, what you are supposed to do. See here. Just wait. For example, let us say I start with 4.1. In this particular question, what is given to you? Department X sells goods to Department Y. I told you how to actually go about this particular question, because you have to do lots of workings, correct? In this question, it is given that if there is Department X and it sells goods to Department Y, and it is given that it sells the goods on 25% on cost. It is given this way around, isn't it or not? Then it is written, and Department X sells goods to Department Y, and Department X also sells the goods to Department Z at 10% profit on cost. 10% profit on cost. Now 10%, because the rate of profit is given on cost, you need to actually put it into selling price. And that you should now know. If cost is 100, margin will be 25, selling price will be 125. So rate of profit on selling price will be equal to 125. And similarly, rate of profit in this case on selling price will be equal to 10 by 110. Is it clear? Similarly, it is given there is another department Y and it sells to department X at a profit of 15% on sales. This time it is given on sales. And department X sells to department Z. Actually, department Y sells to department X and Z at 15% and 20% on sales. Here, rate of profit on sales is given. Then there is department Z also. Now, department Z charges 20% and 25% on cost. Correct? From department X and from department Y. This is given. So first I will convert this rate. Department Z sells goods to department X 20% on cost. Cost 100, margin 20, selling price 120. So 20 by 120 will be the rate. 25, 125 will be the rate. So it is very important that first of all you convert all the rates into selling price. Once you have computed the rates, and what is the problem in this particular question? In this particular question, the main problem is department managers are entitled to 10% commission on net profits subject to unrealized profit on department sales being eliminated. It means, as per the agreement, our departmental managers are supposed to be given commission, whatever net profit is there. From net profit, as per the agreement, unrealized profit will be subtracted. Then whatever net profit will be there, out of that, these managers will be given 10% commission as per the agreement. This line means departmental managers are entitled to 10% commission on net profits subject to unrealized profit on departmental sales being eliminated. Is it clear to you? Now, in this particular question, further you will be given that net profit for the current year is equal to 36,000. Department X, department Y, and then department Z. It is given to you that these are the net profits, correct? But the important point is that it is given departmental profits are after charging managers commission, but before adjustment of unrealized profit are as under. What does it mean? That means whatever your profit was there, you have given the commission. And after charging commission, these are the profits. But point is that these profits now will be considered as wrong. Why it will be considered as wrong? Because you did not subtract the unrealized profit, which you were supposed to. Because as per the agreement, you were supposed to give the commission to the managers after having subtracted the unrealized profit. But unfortunately, you didn't. So you simply subtracted the commission. That means you gave the commission without subtracting unrealized profit. That is why these profit will be considered wrong. So under the first step, what you are supposed to do, as I told you, to begin the question, this should be your first step. And once you have found out this particular step, the next step will be now find out the corrected profit. For that, what you are supposed to write? First, you write 36,000, 27,000 profits which are given to you. As I have written here, net profit after manager's commission, 36,000. Now, see here, if your net profit is 100, manager's commission, if your net profit is 100, your manager's commission is 10, that means net profit after commission will be equal to 90. If net profit before commission is 100, 10 is the commission, then net profit after commission will be 90. Because we are given in the question net profit after commission, I need to find out rate of profit on net profit after commission. So I will write here 10 divided by 90. This rate I will apply on 36,000. It will tell me the amount of commission. Correct? And then I will be able to find out the corrected profit. That means in the current year, we must have earned profit of 40, 30 and 20,000. This should be your second step. Is it clear to you? Now, you have found out the correct profit. Now, before you give commission, it is important that you need to now find out the unrealized profit. Now, how to find out the unrealized profit? I told you in my regular classes, you make a matrix table like this, X, Y, and Z. Now it is given in the question, it will be given in the question that a stock lying with different departments. For example, in the column of Y, it is written 15,000. And here it is written transfer from department X. That means whatever goods which were transferred by department X to department Y and to department Z, out of that closing stock is given to you. So whatever closing stock is given to you, now accordingly, you know the rates that when department X transfers goods to department Y, the rate is 125 by 125. And similarly, when it transferred to Z, the rate is 10 by 110. So you simply write these figures over here, transfer from X. Now, stock lying with Y is 3,000. You apply the rate 25 by 125 or 1 by 5. Similarly, this much. And you can get the unrealized profit of X, similarly of Y, and similarly of Z. So now you can get the unrealized profit. So whatever unrealized profit is there, now in final statement, what you are supposed to do, you simply write the net profit before commission. Then you subtract the unrealized profit. Now you get the net profit after unrealized profit. Now you apply the commission, but now you apply the rate of commission 10%, and then you can find out the corrected profits. Is it clear to you or not? Very important questions. So these are very important questions. Is it clear to you or not? Another important point, uniform gross profit rate. Under this uniform gross profit rate, what you are supposed to do? Correct? Just wait. Just to make the point clear, Metro Mall has 3 departments and submits the following information for the year ended 31st/3/2025. You will be given such information in the question in this fashion. For example, it will be given that Department A, Department B, Department C. That means there are 3 departments, Department A, Department B, and C. It is given to you how many units have been purchased by the respective department. Purchases in units will be given to you, correct? Now, for example, it is given that 5,000 units have been purchased by A. Similarly, 10,000 units have been purchased by Department B, and similarly, 15,000 units have been purchased by this department. Is it clear to you? Further, it is also given to you in the question that these departments have also sold some units. ABC, total sales in units. Total sales in units will be also given to you. For example, total sales of Department A is 5,200. Total sales of Department B is equal to 9,800. And of C, it is equal to 15,300. Correct? Importantly, you will be given the selling price. Now, selling price is 40, 45, and 50. It is also given. That means you can easily compute the total sales of the respective department by simply multiplying the units sold with the respective selling price. And you are also given in this question closing stock. Now, closing stock in units is also given to you in the question. Closing stock with Department A is 400, B is 600, and with 700. This is given to you. Either you will be given closing stock or you will be given opening stock. Out of these two, you will be given one thing. You can find out the missing unit very easily. For example, how to find out the closing stock. They haven't given very clearly. I will tell you. In order to find out the closing stock, you can simply write here A, B, C, whatever departments are given to you. Now, we know that closing stock is 400, 600, 700. Opening stock is written here and units purchased. Units purchased is given to us. Units purchased is 5,000, 10,000, 15,000. Then whatever units which we have sold, I am going to write here 5,200, 9,800, and 15,300 units sold. So I can get the balancing figure as the opening stock. Is it clear to you? Sometime in the question you will not be given closing stock, but opening stock will be given. In that case, closing balance will be this. Logically, your first step should be to determine either the amount of opening stock or closing stock. Now in this case, closing stock is given. We have found out the opening stock. Is it clear to you? Now once we have found out this, now the next point, what we are supposed to do, kindly pay attention here. This is the most important part. We have to find out, see here, selling price of the units purchased. Under the second step, indirectly what I'm trying to tell you is that I will write here A, B and C. I will write their respective units which they have purchased. For example, it was given that A has purchased 10, B has purchased 10, 15,000 purchased. I am not going to write here sales. I am going to write here units purchased. I will multiply it with selling price. The selling price was given in the question, as I told you, 40, 45, 50. Correct? Now, after multiplying, I will get the total value of total sale value of units purchased. So, whatever value which I am going to get, that will be equal to, I think, 8,40,000. Is it clear to you? This will tell me the total sale value of purchased units. Total sale value of the purchased units. Now, in this particular question, you remember, you were not given what is your purchased cost per unit. It was not given. But you were given total purchases 8,40,000. It was given that total value of purchases is 8,40,000. It is given in the question, but you are not given what exactly is the purchase cost for department A or B or C, but you are given total amount of purchases. Now, under the second step, first you find out what we call total sale value of the purchased unit and then subtract from there on the total amount of purchases. Whatever units which you have purchased, if you will sell them, you will get 8,40,000. And their total purchased cost was given to us, total value is coming to 14 lakh. Correct? Total sale value of this is 14 lakh and total purchase value is 8,40,000. As I told you, the difference will be 5,60,000. This will give you your profit margin. So your profit margin, that means your 5,60,000 is the profit and your total sales is equal to 14 lakh. You multiply it with this and you can get what we call your margin rate. Or you can, if you do not want to compute the margin rate, you simply take 560 by 1,400 as your margin rate. Is it clear to you? Is it clear? Now, you are being given selling prices under the next step. Your first step was to determine closing or opening stocks. Under the second step, you try to find out the sale value of the purchased units. Under the third step, you will get the margin rate. Whatever profit is there, you divide it by sale, you will get the margin rate. That is selling gross profit margin rate. Now under fourth step, actually you simply write the selling prices. Respective selling prices are given to us. For example, in this case, respective selling prices is 40, then 45, and then 20. Is it clear to you? Now, if you will compute it, it will be equal to 40%. Correct? So now you apply here the margin 40%, 40% of 40, 40% of 45, 40% of 20. Is it clear to you? That will be something near about what we call 24, 27 and 30. No, it will, how can it be this much? Actually, this is 50s. So ultimately you will get the, what we call your margins. Now you subtract the margin from the selling price. Now you are going to get the cost. Your cost will be, actually this is coming to 16. This is coming to 18 and this is coming to 20. Now you will get the what we call cost price per unit 24, 27, 30. Actually everything is given here, but just to make it more clear. Now you have the cost price. This is the only point in this entire step. Now actually the question will simply ask you to prepare a departmental trading account. So once you have the cost price, now you can fill up your departmental trading account. In order to fill it up, you have to find out the values of opening stock. Now value of units you have got, you simply multiply it with 24, 27, 28 to get the values. Similarly, purchase units you are having, you have got the respective prices. Now you find out the value, sales value is already with you. Closing stock, whatever units are there, you multiply it with this value, you will get the closing stock, and finally you will get the profit. This is how you are supposed to do this one. Is it clear to you or not? So this is what you are supposed to do. These are lengthy chapters, so I am taking a bit of time and to make you understand actually how to do this. Is it clear to you or not? So sometimes lengthy chapters give the student a bit of problems. So I have tried my level best to actually level them up. Is it clear to you? So now we are going to pick up what we call insurance claims as far as this ultra quick revision series is concerned. In this particular series now, under insurance claims, we are going to pick up the first topic, loss of stock policy, and there are many prominent topics actually under this particular chapter. One is loss of stock policy. As I just told you, under this, there are some simpler questions, but you have to take care of the questions related to abnormal line of goods. These questions are pretty important, and you can expect a question out of abnormal loss of goods. And similarly, actually, then we are going to pick up the second topic, that is loss of profit policy. These are the two vital, what we call, topics of this particular chapter. Loss of stock policy. What we used to do under loss of stock policy. Under loss of stock policy, if you remember actually, first of all, we used to prepare memorandum trading account. And in order to prepare the memorandum trading account, actually, we used to write opening stock. Correct? And then we used to take into account the purchases in the current year up to the date of fire. Similarly, sales up to the date of fire. Now, because the stock has been lost out, we have to actually find out the stock. But the problem is how to find out the stock. We are not having the gross profit. So generally in the question, it will be given to us what was our past year rate of gross profit rate. Now gross profit rate, let us say of earlier year is 35%. It could be given to you in this way, that average rate of gross profit is so and so. So you simply apply that gross profit rate to your current year's sales. So you can get your gross profit. Now you have all these items. Now you balance it, you will get the closing stock. That means the first step is to determine what we call determine the amount of closing stock. So we may say that on the date of fire, actually our closing stock should have been 2,44,000. Is it clear to you? So after that, we would compute what we call loss of stock. In order to compute the loss of stock, first of all, we will write what we call 2,44,000. That is the stock as per memorandum trading account. And then we will subtract any salvage value if there would be any. After subtracting the salvage value, we will get what we call our loss of stock. So once we have got the amount of loss of stock, now we are going to write closing stock and amount of policy. Now closing stock you must write as per memorandum trading account. That means on the date of fire, your closing stock is 2,44,000 and amount of policy is 1,50,000. What does it mean? It means for closing stock of 2,44,000, you have taken a policy of 1,50,000. Now, because your loss is 2,19,000, so what will be the policy amount against this loss? So you can now simply multiply 2,19,000 with 1,50,000 and divide it by 2,40,000 to get what we call your answer. Generally, when we compute in this manner the amount of claim, it is known as average clause. It is known as average clause. I told you, unless and until question states otherwise, we shall always presume that there is average clause. However, if suppose question specifically states that there is no average clause. If question states so, in that case, in order to compute the claim, we will simply write the amount of what we call closing stock. We will simply write the amount of closing stock, that is 2,44,000. We will simply write the amount of what we call loss, 2,19,000. And we are simply going to compare it what we call with amount of policy. In case if there is clearly what we call some restriction in the question that you need not require to apply the average clause, in that case, in order to compute the amount of insurance claim, we will simply take into account the what we call a total loss of stock and compare it with the insurance policy, and the lower figure will be considered as the amount of claim. Is it clear to you? But unless and until it is specifically not given, we shall always presume that there is average clause. And when there is an average clause, in order to compute the what we call amount of what we call claim, first of all we will write the amount of closing stock, and then we will take into account the what we call policy amount. It means for 2,44,000 worth of stock, we have taken an amount of policy amount of 1,50,000. So what will be the amount of policy amount against the loss of 2,19,000? So now you are in a position to compute your what we call loss. Is it clear to you? These are the questions related to what we call loss of profit policy. However, under loss of profit policy, you need to exercise caution with respect to what we call questions which are related to abnormal loss of goods. This is where actually I've seen a student confronts lots of problems. And yes, this is the topic. This is the most important topic. Abnormal line of goods question or damaged goods or slow moving goods. What does it mean actually and what we are supposed to do under it? In order to make you understand, I will pick up this particular question. Correct? Just to make you understand and just revise the concept. Now it is given that on 11/11/2027, the premises of a particular company was destroyed by fire. Further, it is given that following information is available. Now, question says that on 1/4/2016. Now, that means our accounting year, first of all, 1/4/2016. And this accounting year will end on 31/3/2017. Is it clear to you? Question states that there is an opening stock. On this particular date, there is an opening stock of 3,75,000. The question says that purchases from 1/4/2016, that means purchases from 1/4/2016 to 31/3/2017, it is given 5,20,000. Then sales are also given for this particular period, 8,55,000. Entire amount of purchases for the years 16 and 17 and sales amount is also given. Now question says that stock on 31/3/2017, that means on this date your closing stock is given to you as 2 lakh rupees. 2 lakh rupees it is given. Now question says that purchases from 1/4/2017. Now 1/4/2017, your accounting year, current accounting year is starting and ending on 31/3/2018. Now, if you remember in my regular classes, I had talked about this particular fact that wherever in the question actually you are given complete information with respect to last year. In that case, you will have to first of all prepare trading account, and then in the current year you will have to prepare the memorandum trading account. Is it clear to you? So in the current year, now it is given that your purchases, first of all, it is given that your stock destroyed on 11/11/2017. That means current year's period is from 1/4/2017 to 11/11/2017. On this particular date of fire took place. Fire took place. Purchases in the current period from the opening date till the what we call date of fire was 3,41,000. It is clearly given in the question, and sales is also given to the extent of 4,35,000. So purchases and sales amount is given. Till up to this particular point, there is no problem. But the problem with respect to abnormal line of goods is this. Now further it is given in the question that in valuing the stock on 31/3/2017, due to damage, 50% of the value of stock which originally cost 22,000 was written off. Now this line confuses, and we had talked a lot about this particular line. In simple, what does it mean? Question says that on 31/3/2017. Now this is 31/3/2017. That means last year, because your current year is starting on 1/4/2017 and date of fire is 11/11/2017. So when your last year ended on 31/3/2017, it is stated in the question that your stock valuation is 2 lakh. It is given here that you valued the stock at rupees 2 lakh. But below it is written that when you were valuing the stock on 31/3/2017, due to damage, 50% of the value of the stock which originally cost 22,000 was written off. What does it mean? It means when you valued this stock, you found that there were some goods which were of generally it is known as abnormal line of goods or damaged goods or slow moving goods. How I found out that these are actually abnormal goods, damaged goods or slow moving goods? Because it is given in the question that some portion of the goods was written off. So whenever it is written this way around, automatically it should strike to you actually that these goods are of abnormal nature. Is it clear to you? Now it is given that these goods originally cost 22,000. It is also given now that out of 22,000, 50% of the value of the stock which originally cost 22,000 was written off. What does it mean? If you remember in my regular classes, I talked about this particular fact. Was written off means this portion was not included while valuing the stock. when it is stated in the question that out of 22,000, 50% was written off, indirectly it means 50% is not written off. Now, if 50% is not written off, it means actually this portion is already included in it. Is it clear to you or not? Is it clear? Now, first of all, what you should, in your rough work, first of all, out of 2 lakh, this is your stock which you have already valued. First of all, you deduct the entire what we call 22,000. You subtract this entire 22,000. You will be left up with 1,78,000. But it is given in the question that out of 22,000, 11,000 worth of stock was not in, sorry, actually, just wait, extremely sorry. Now, because your closing stock is 2 lakh, now we know that out of this 2 lakh, this 11,000 is included. That means this 11,000 is already included. This 11,000 is already included in it. So you need not require to add this. You need not require to add this because it is already included in it. But important point is that you must keep in your mind that out of 2 lakh, the closing stock which is given to you, because it includes 11,000, that means rest of the goods, 1,18,000 will be considered as normal goods and 11,000 will be considered as what we call abnormal goods. Out of this 2 lakh, now you should be in a position to figure it out that 1,89,000 are normal goods because it includes 11,000 worth of goods which are not normal. Are you getting my point or not? So that is the reason, first of all, you subtract 11,000 to find out what we call your normal goods. Now, the main point is that because this portion is not included. Now, the question is why I should include it. I must include it. In order to know my full closing stock at the end of the last year, I must include even this portion also, 11,000. So that is why when I am going to prepare the trading account at the end of the last year, this is my trading account. Why I am preparing trading account? Because complete information of the last year is given. So opening stock 3,75,000 was given, purchases for the whole year is given, sales for the whole year is given. Now see how I am writing here closing stock. First I have written 1,89,000. I just told you 1,89,000. This 2 lakh comprises of 189 and plus 11,000 plus abnormal goods already included. But important point, this 11,000 which is not included, you must include it. Is it clear to you? That is the point actually. So indirectly you will write here 2,11,000. Is it clear to you? Now you can find out your gross profit. Once you have determined the gross profit, you can find out the gross profit rate. 1,71,000 divided by 8,55,000 into 100, that is equal to 20%. Now we come over to the current year. Now in the current year, first of all, when I am going to write here, see actually how I am going to write. I will prepare 2 columns. Now, correct, normal and abnormal goods. 2 columns will be prepared because now I know in advance in the beginning of the year that there are some abnormal goods. So first of all, I will write under the normal column 1,89,000. And in this column, I will write 22,000 worth of total abnormal loss goods. Is it clear to you? 11,000, 11,000, 22,000. Then I will write the current year purchases. I will write the current year sales. Now the next point is where we need to exercise caution. Question says that in June 2017 means in the current year, 50% of the stock was sold for 5,500 and balance of obsolete stock is expected to realize the same price. 50% of the stock was sold. Now what does it mean? See, in the current year, first of all, you need to understand this way around. In the current year, 50% of the stock was sold. And question says that 50% of this stock was sold for 5,500. Now, 22,000 was abnormal goods. Now, 50% of the stock will be equal to 11,000. But this 11,000 worth of goods were sold for rupees 5,500. It is stated in the question. But their cost was 11,000. So first of all, you need to understand that there is a loss of 5,500 in this case. You will write here by profit and loss account. Very important. In your total current year sale, which was given in the question was 4,35,500. Actually, it was given 4,35,500. Indirectly, it means this sales also include this 5,500 worth of sale of abnormal goods. So sale of normal goods will be equal to 4,30,000. So that is the reason you will write here 4,30,000 and you will write 5,500. Is it clear to you or not? Now, out of 22,000, 50% of the worth of goods have been sold. So remaining goods will be equal to 11,000. Remaining goods will be 11,000 only, isn't it or not? Now question says that balance of obsolete stock, that means damaged stock, is expected to realize the same price. Expected to realize the same price, what does it mean? See, just a moment ago it was given to us that 50% of the goods realized 5,500. And question now saying that remaining abnormal goods which are 11,000 are expected to realize same price. That means remaining abnormal goods are 11,000 and they are expected to fetch us only 5,500. So because they are expected to fetch only 5,500, so again there will be a loss of 5,500. So that is why I will write here profit and loss account on valuation of closing stock 5,500, and because they are expected to realize, they haven't been sold, they are expected to realize 5,500, I will write the value of abnormal loss closing stock 5,500. Is it clear to you? Then you can find out the gross profit easily, because 20% rate is given to you. You are going to apply it on 4,30,000, and then you can find out your closing stock. And then rest of the things you can do it by yourself. Now total closing stock will be equal to this much, 1,91,000. You subtract salvage value and get the loss of stock. In this question, insurance policy is not given, so you cannot compute the amount of claim. Is it clear to you? These questions are very important. You must do this question, and you must also try to do 2.4. From this particular topic, these are the focal areas. Is it clear to you or not? Honestly speaking, you should not expect a question from this topic, but still, under loss of profit policy, what we used to do, under loss of profit policy, see here, just to make you understand. Under loss of profit policy, to make you understand, let us say I will pick up this question, correct? Okay, I will tell you this way around so that you understand it in a better manner. First of all, we used to compute what we call rate of gross profit under this particular topic, loss of profit policy. First of all, we used to compute the rate of gross profit. In order to compute the rate of gross profit, it is very important to understand that we will take into account the net profit of the last year. Correct? Net profit of the last year. Suppose this is my current year and this is my last year, so I am going to take into account the net profit of the last year. While explaining this topic, I talked about standing charges or standing expenses. Standing expenses means such expenses which are of fixed nature. Is it clear to you? So standing charges means you will have to incur such expenses irrespective of what we call your operations. So standing charges may be insured or may be uninsured. Insured or uninsured. So here it is. So while computing rate of gross profit, first of all, you will take into account net profit plus insured standing charges, and you will divide it by the turnover of the last financial year. Turnover of the last financial year. Is it clear to you? For example, our net profit of the last year is 75, and let us say insured standing charges for the last year are 56, and turnover of the last year is 420. Then you multiply it with 100 and get your gross profit rate. Now suppose in the question it is given some adjustment that gross profit rate need to be increased by 5%. Suppose had it been given, I would have added 5% to 30%. Then my effective gross profit rate would have been 35%. Then I am going to compute, after having computed gross profit rate, I am supposed to compute the annual adjusted turnover. In order to compute the annual adjusted turnover, we will take into account, very important, actual turnover of last 12 months. What does it mean, actual turnover of the last 12 months? Suppose this is my date of fire. See, one is turnover of the last year and one is turnover prior to 12 months. Suppose this is the date of fire, and generally it will be given in the question that your actual turnover of 12 months prior to the date of fire was how much. It will be given in the question. So you will take into account actual turnover prior to 12 months of the date of fire, correct? So suppose it is 4,50,000, let us say, And here you will have to do the adjustment, because generally the adjustment will be given that sales need to be increased by 15%, 10%, whatever percentage is given, you apply. After having applied that, you will get the annual adjusted turnover. What does it mean actually? In my regular classes, I talked about this particular fact, that suppose in the current year, date of fire has taken place over here. If there would have been no date of fire, if there would have been no fire, then under normal circumstances, in 12 months, my turnover would have been this much. This is what we mean by annual adjusted turnover. Indirectly, it means under normal circumstances, my turnover for 12 months would have been 5,17,500. So we are going to compute here annual adjusted turnover. Once we have computed the annual adjusted turnover, then we will compute the what we call gross profit on annual adjusted turnover. I told you in my regular classes, gross profit on annual adjusted turnover also means insurable profit, because sometime in the question, student fraternity do not know actually that the insurance policy which you have taken, it has been taken for what amount of profit. So gross profit on annual adjusted turnover signifies that for this profit you have taken the insurance policy. Is it clear to you? So whatever your annual adjusted turnover is there, you apply your effective gross profit rate and you are going to compute the gross profit on annual adjusted turnover. Is it clear to you or not? Now, under fourth step, you are going to take into account reduction in short sales. In order to compute the reduction in short sales, first of all, suppose this is my current year and here date of fire has taken place. Is it clear to you? So, this is my date of fire in the current year. And after the date of fire, let us say, for the next 3 months, our accounts suffered. As I told you, this period is known as dislocated period. It is known as dislocated periods, disoriented period, isn't it, or affected period. Obviously, because after the date of fire, our operations will get hampered and we won't be able to carry out our operation in a very smooth manner. So that is the reason it is known as dislocated period. And obviously, under this particular period, my sales will be less. I will compare this period with the last period. As I told you in my regular class, it is known as corresponding period. So in order to compute your short sales, first of all, what I am going to take into account the turnover which will be given to us. The turnover in the affected period, let us say, is 2 lakh. First, I am going to apply the what we call adjustment. Suppose in the question it is given that your sales are rising by 15%, you are going to add here. So it means standard turnover 2,30,000. What does it mean? It means actually, try to understand, in order to compute the what we call reduction in turnover, first of all, in fact, I will take into account the turnover of the corresponding period. I'm sorry, excellently. I'm going to take into account the what we call turnover of the corresponding period. Let us say last year in this period, parallel to this period, turnover was 2 lakh. So I'm going to write what we call turnover of the corresponding period, that is 2 lakh. Is it clear to you? Then I'm going to apply what we call percentage. Now let us say percentage is 15%. Then I'm going to get standard turnover. Standard turnover means under normal circumstances, in this period, my sales should have been 2,30,000. Now I'm going to subtract my actual sales. The actual sales means the sales of this particular period. Let us say sales of this particular period is 80,000. I'm going to subtract it. I'm going to get 1,50,000 as the short sales. Is it clear to you or not? So my short sales is equal to 1,50,000. Is it clear to you? Now, once we have computed all these 4 items, first of all, as I told you, we are going to compute the gross profit rate, then we will take into account the adjusted annual turnover, then we are going to find out the gross profit on annual adjusted turnover. It is also known as insurable profits. Then you must find out your short sales. Is it clear to you? Also known as deficient sales. Now we have to prepare the statement showing the computation of net loss or profits. For that, what I am supposed to do? Loss, first of all, I'm going to write here loss on account of short sales. Because my short sales are 1,50,000, my sales are short, and my effective gross profit rate is 30%. That means there is a loss of profit of 45,000. Then next step is little bit cumbersome. Here, I will write additional expenses. Correct? Because when we are doing additional expenses, indirectly it is also a loss because it is contributing to a loss. Now, out of least figure, we will take now actual expenses. It will always be given in the question that in the dislocated period, there are some additional expenses. So additional expenses you are going to write here, known as actual expenses. Then under second step, you are going to write here gross profit on increased turnover in disorganized period due to additional expenses. This step is vital. Under this particular step, you are going to find out, let us say it is given that in the dislocated period, my additional sales is equal to 80,000. Let us say question also states that if actual expenses would not have been incurred, then my sales would have been 55,000. Let us say if it would have been given in the question. In the dislocated period, my sales are 80,000, let us say. And further it is given in the question, let us say we are presuming that additional expenses we did not incur, or if we would not have had incurred additional expenses, let us say my sales amount would have been 55,000. Indirectly, it means if additional expenses wouldn't have been incurred, in that case, our what we call sales in the dislocated period would have been only 55,000. Indirectly, it means due to additional expenses, sales increased in the dislocated period by 15,000. Indirectly, it means, are you getting my point? But sometimes this information is not given in the question. That if additional expenses would not have been incurred, this would have been your what we call sales. If nothing is given in the question actually, and in this question nothing has been given, to be very honest with you. It has been given in this particular question only this much, that your sales in the dislocated period is 80,000 and nothing is given. So under such question, you will have to presume this way. If you would not have incurred your additional expenses, your sales would have been 0. You have to presume it this way. So indirectly, it means actually, if I would not have had incurred additional expenses, my sales would have been 0. So indirectly, it means due to additional expenses, my sales increased by 80,000. So gross profit on increased turnover in disorganized period due to additional sales. In this case, increased turnover in the dislocated period will be considered as 80,000. You multiply it with 30%, you will get 24,000. Correct? And then last, we write proportionate expenses. For that, I will write what we call gross profit on annual adjusted turnover in the numerator. In the denominator also, I will write the same amount, and I will add uninsured standing charges. And then I will multiply it with actual expenses. Let us say my what we call gross profit on annual adjusted turnover happens to be 1,55,250. I am going to first of all write that amount in the numerator, in the denominator also, and then uninsured standing charges 1,55,250 divided by this. Then I am going to multiply it with 6,700. Let us say this is the figure. Now out of these three figures, we are going to take into account the lowest figure in the outer column. Now I am going to add these two amounts to get what we call total claim. But if there are some savings in the question, you are going to subtract the same. So after subtracting the amount of savings, you are going to get what we call net loss of profit. Now, in order to compute the amount of claim, as I told you, so in order to compute the amount of claim, first of all, you are going to write here your total gross profit on insurance, gross profit on annual adjusted turnover, which happens to be 1,55,000, or it is also known as insurable profit, 1,55,250. You can write insurable profits also, gross profit on annual adjusted turnover or insurable profits. Now you are going to compare it with the amount of policy. Now policy amount, let us say, is 1,50,000. So for this much of loss of profit, this much is the policy amount. Now for this much of loss, how much will be the amount of policy? If I would have computed in this manner, it means I am applying average clause. But in this question, it is clearly given average clause is not applicable. Claim amount would have been. Now see here, actually in this question also it is given average clause is applicable. Suppose if it is not given, in that case I would have simply taken into account the loss and I would have compared it with the policy amount. Now loss amount is 48,922 and policy amount is 1,50,000. In this case, claim amount would have been that much if there would not have been any what we call average clause. Is it clear to you? If average clause is applicable, you are going to compute in this manner and your answer will be this much. These are the topics. You can leave the fourth topic you need not require to do and waste your time. Correct? Topic number 4, actually it comprises of combined question, although we have done in the class, but you need not require to do it, to be very honest with you. Now last section, after having done those 2 questions of abnormal line of goods, you must do section 5 completely. Actually this section is nothing but combination of section 1 and 2. Is it clear to you? And I have done all these questions in your regular classes, but you can have a look over here. Only this much, section 5 and 2 questions of abnormal lines of goods. So this chapter will be completely what we call completed. Is it clear to you? So now in this revision series, we are going to pick up what we call NPO. This is yet another formidable chapter, pretty long one and lengthier one too. Now under this, as you know, in the regular classes, we started off with what we call preparation of the subscription account, and over there we have done lots of questions. I told you in order to find out the amount of subscription, first of all, you will write here opening due. When we say opening due, it means the total subscription in arrear or total subscription due or total subscription outstanding for the last year we are going to write over here. Is it clear to you? For example, in this particular question, it is given total subscription we have received in the current year. For last year, 10,000, for current year, 1 lakh and 20,000 for the next year. That means total subscription which we received in the current year are 1,30,000, but out of 130, 10,000 relates to last year, 1 lakh to current year and 20,000 to the next year. But below it is given that subscription outstanding for the last year were 15,000. So I am going to write the total subscription outstanding at the end of the last year, 15,000. Is it clear to you? But I must keep in mind that out of 15,000 which were due at the end of the last year, in the current year, we have received out of that 10,000 rupees, because here it is written that out of 1,30,000, 10,000 relates to last year. That means out of 15,000 at the end of the year, still 5,000 subscription are outstanding. That means at the end of current year, last year outstanding are still there 5,000. So it is important to understand that you are going to write here 15,000, and when you are going to write closing subscription, that is subscription due at the end of the current year, you will also write here total subscription due at the end of the last year for current year. Now for current year, there are 5,000 worth of subscription. You must keep it in your mind. Is it clear to you or not? And so I will write here 5,000. That is last year's due. I have written here total due till the end of the last year 15,000. Out of that 10,000 received in the current year. So that is why 5,000 is still outstanding. That means when I am going to write total due at the end of the current year, at the end of the year, total due, out of total due 5,000 relates to last year, and current year's how much debt we will come to know. And here it is given that subscription outstanding for the current year is 30,000. So I will write 30,000. So total subscription due will be 35,000. At the end of the year, total subscription due 35,000. Another important point is, the total subscription which you have received 1,30,000, you are going to write here 1,30,000. Opening due, closing due. Generally we write here opening advance, but generally opening advance is not given. Then I am going to write closing advance. Now regarding closing advance, we can have a look over here. Out of 1,30,000, 20,000 are related to next year. And below also it is given subscription received in advance for the next year. I told you in the regular classes there cannot be any difference between these two amounts. Is it clear to you? So 20,000 you are going to write closing advance. Now you have this figure, you have 35,000, you have opening, and you have this figure, so you can get this figure. This figure means this much of amount of subscription we should have had received in the current year, and that is taken to what we call income and expenditure account. That is how subscription account is prepared, and we did lots of questions with respect to that. Then next one is preparation of income and expenditure account and the balance sheet. How to prepare income and expenditure account when balance sheet is given. Now remember one thing, actually in this particular question we will be given receipt and payment account, and we are supposed to prepare income and expenditure account and a balance sheet. I told you the rule is very simple. Very simple. It is not tough at all. All we have to do is to first of all start with our right hand side. This is my receipt and payment account for the current year 31st/3/2025 is given. First of all, I must pick up what we call payment side. When I pick up the payment side, I need to take care. For example, the first item is medical supplier. Correct? Now, if I will check whether any information is given or not. For example, in this case, there are two information, stock of medicine and medicine suppliers account. Two informations are related. So for that, I will have to compute the stock of medicine account and what we call medicine suppliers account. As I told you in the class, just stock of medicine account. Stock of medicine account I will prepare. Now, because stock of medicine is an asset, I am going to write opening balance. Opening balance is 10,000. I will write closing balance, and closing balance is 15,000. Simultaneously, I am going to prepare creditors, supplier or creditors for medicine suppliers. Now, medicine supplier 8,000. It is a liability, so I will write buy balance brought down 8,000. Then I am going to write buy balance carried down, that is equal to 12,000. Because this is receipt and payment account. This is my receipt and payment account. On the credit side, we have written medicine supplier. That means we have paid to suppliers. We have made a payment to supplier. So because we have made a payment to supplier, it will be written in the supplier account, creditors for medicine suppliers. I will write 30,000. After this, I will come to know 42 minus 8,000, whatever it is, 34. I will come to know that this much purchases we must have made during the year. This purchases, because we have purchased the stock of medicine, this will be taken over here. And you are going to write here purchases or simply creditors, whatever you may like to write, 34,000. Now you had stock of medicine 10,000 in the beginning. You purchased 34,000. So 44,000 should have been the closing stock. But closing stock is 15,000. So indirectly it means actually 29,000 worth of medicine have been consumed. I also told you that means now you need not require to touch this item. You need not require to write this item anywhere, neither in your what we call income and expenditure account nor in your balance sheet, because this item has been written over here. So many times I have told you actually posting will be done only once, because this is receipt and payment account. Already it is written once over here and you have written over here. So two postings are over. Now, as far as these accounts are concerned, opening and closing stock will be written in the balance sheet. Medicines which you have consumed will be taken to the what we call debit side of income and expenditure account. This item is already posted here, so you need not require to post this item anywhere else. Now coming over to the creditors, opening and closing balance will be written in the balance sheet, and this account, receipt and payment account, is already written over here. So this is how you have to move about. Similarly, honorarium to doctors, no information is given below, you put it on the debit side of profit or loss account. Salaries, no information is given in the question, so you put it on the debit side. If suppose there would have been any outstanding, then you would have added it, otherwise simply take it. Similarly, sundry expenses. Now coming over to equipment, because equipment some information is given, so you will prepare an equipment account. You will write the opening balance, you will write the closing balance. On the debit side, you are going to write to receipt and payment 12,000, and balancing figure will be your depreciation. Opening and closing balance will be written in the balance sheet, correct? And depreciation amount which you will arrive at will be taken to the debit side of income and expenditure account. Charity show expenses will be taken to what we call debit side. Balance carried down means the closing balance of cash, you are going to write it on the what we call asset side of the current year. Opening, now this side is over. Now we move over to this side. Opening balance brought down, 7,000 is given. We are going to write it what we call on the debit side, or sorry, on the asset side of the last year, because this is opening balance. Now regarding subscription, you will prepare the subscription account as I told you, correct? That means this much this year you have received subscription of 50,000. Now in the question you are given opening due is nil. So opening due is nil and closing due is 2,000. So simply you will write, and 52,000 you are going to get the balancing figure. You are going to put it on the credit side. Opening due and closing due are written in the balance sheet on the asset side. Is it clear to you? Donations 14,500 is given. Now donation you take it to the credit side of your income side. Further it is given interest on investment 10,000. This item is important. 10,000 interest income, well you are going to write it on the credit side of your income account, income and expenditure. But here it is given interest on investment at 10%. What does it mean? It means actually you must have done some investment, and on that at the rate of 10% you have received 10,000 as interest. So what is your amount of investment? So you can now find out that is 10,000 into 100 divided by 10. So that way you can find out that 1 lakh was your investment amount. Now if you are going to prepare investment account opening balance 1 lakh, but you did not purchase any investment in the current year, so your closing balance will also be 1 lakh. So you should not forget to write investment on the asset side of your opening balance sheet and closing balance sheet. Is it clear to you? Charity show proceeds means collection. So it will be written on the credit side. The point here is that you need to understand that first of all, you are going to move about taking into account the payment side, then slowly you will move over to the what we call liability side, and then you must have a look that all the adjustment have been taken care of. For example, value of building is still not adjusted, so you are going to prepare building account. You will get depreciation. Opening closing balance of building will be written in the balance sheet. 2,500 depreciation will be written on the debit side of income and expenditure account. Simple approach. Is it clear to you? Nothing tough in this particular case. Similar is the case with respect to what we call 2.2. Let us say, for example, I have purchased the balls. Now below, because there is some information, stock of balls is given. So I will prepare a balls account, stock of balls account. I will write the opening balance because it is given stock of balls in the beginning was 4,000. Correct? Sorry, at the end, this is closing date. So closing balance is given. That means if I am going to prepare stock of balls account, I will write 80,000 purchases, that is receipt and payment account, and closing balance is 4,000. Opening balance is not given. So 76,000 worth of balls have been consumed. So 76,000 will be written on the debit side, closing balance will be written on the asset side. That's all. Tournament fees is given. Now tournament fees you are going to write on the credit side. Correct? Affiliation fee, on the debit side of income and expenditure. Similarly, affiliation fees, rent of playground, some information is given with respect to rent, I think, right? Here it is given rent of playground, due but not paid for current year 6,000. Current year you are going to add, last year you are going to minus, and then you are going to write the adjusted figure in the debit side of income and expenditure account. But closing outstanding and last year outstanding must be put on the liability side of the balance sheet. Refreshment expenses on the debit side of P&L, I mean to say income and expenditure. Tournament expenses. Investment account, if you want to prepare, you can prepare an investment account, but even suppose if I prepare investment account, I will write to receipt and payment account 1 lakh. And no further information is given, so I will write a closing balance of 1 lakh. So this 1 lakh will be written in the current year's balance sheet. Miscellaneous expenses you are going to put on the debit side. Closing balance will be written on the asset side. Is it clear to you or not? Similarly, opening balance of cash, last year's balance sheet. Subscription received. Obviously, you are going to prepare subscription account. You are going to write 2,46,000 total subscription received. Below it is given subscription received include 10,000 for the last year. So out of 246 last year's subscription, so we shall presume last year's subscription due were 10,000. And for next year it is 8,000, so it will be considered as closing advance. And 16,000 is still outstanding, so closing outstanding is 16,000. So whatever balancing figure you get, I think 2,44,000, it will be income and expenditure account. Opening and closing due will be written on the asset side. Opening and closing advance will be put on the liability side. That's all. Similarly, in this particular question, you are being given interest 2,000. It is an income. Below it is written interest earned but not received. So first of all, you will write on the credit side of income and expenditure account interest. You add accrued 500. Then write 2,500 and 500 will be taken to the asset side. You must not forget. Is it clear to you? Sale of furniture here is given. Now regarding sale of furniture, see here. So obviously you will have to prepare furniture account because furniture is an asset. Now sale of furniture you will write on the credit side. You sold furniture for rupees 2,000. It is given in the question. You write 2,000. Further it is given book value of furniture sold is 14,000. Now book value of the furniture sold is 14,000. That means 14,000 worth of furniture has been sold for rupees. Sale of furniture actually is 10,000. Has been sold for rupees 10,000. So there is a loss of 4,000. This loss will be taken to income and expenditure. Now I am going to balance it. It means opening balance of furniture was 14,000. So opening balance will be written on the asset side of the opening balance sheet. This amount is already posted to receipt and payment. You need not require to post it again. And 4,000 loss will be taken to the debit side of income and expenditure account. Similarly, donations for club building. Because this time the purpose of the donation is mentioned, you are going to capitalize this. In order to capitalize it, you are going to write it on the liability side of the current year's balance sheet. So your first information, second information, and one more information, salary outstanding. That is simple. When you write the salary, simply add 5,000 outstanding in your debit side of expenditure account. Correct? And then 5,000 worth of salary you must not forget to write in the balance sheet also. So this is how these questions are done. Not very tough. Is it clear to you? Same pattern we are going to adopt when we are supposed to prepare what we call receipt and payment account. Correct? In the earlier question, we were supposed to prepare income and expenditure account and balance sheet. Now, in this type of questions, actually, we are supposed to prepare receipt and payment account and a balance sheet in case if the question demands. Is it clear to you? But we are going to adopt the same approach. As I told you in the class, we need not require to change the approach. Is it clear to you or not? So, for example, only difference is that here income and expenditure account is given. For example, salaries are given 1,20,000. First, I will pick whether any salaries are given or not. So, salary outstanding, here it is given 8,000, here it is given 10,000. The only difference is that in the first method, when we are supposed to prepare income and expenditure account, regarding outstanding expenses, we can make the adjustment in the what we call income and expenditure account simply by adding or subtracting. But under this approach, I told you in the regular classes that even for outstanding expenses, you must prepare account. For example, suppose if I have done this question here, okay, I will simply tell. Outstanding salaries, for example, it is given for last year 8,000. For current year, it is given 10,000. So I will simply write this salary because it is written on the expenditure. I will cross it. So I will write here 1,20,000. So this way round, balancing figure will tell me how much amount I have paid in the current year. Because I am supposed to prepare receipt and payment account, this figure will be written on the payment side. Opening and closing balance will be written on the debit side. This figure is already written over here. This is the approach we have to adopt under this particular method. Similarly, printing and stationery is given. No further information is given. If no further information is given, for example, you directly write it on the payment side. Similarly, rent. Regarding rent, no information is given. You simply take the amount of rent to the payment side. Repairs, no expenditure given. Sundry expenses, nothing is given. So all these items will be taken directly to the payment side. Interest to bank also. Now depreciation on sports. Now I will have to prepare a sports equipment account because it is given below that club had sports equipment on 1/4/2028 52,000 and at the end of the year 54,000. So opening and closing balance of sports equipment is given 52,000, 54,000. Now because here it is written depreciation, so I am going to write depreciation here. So depreciation 6,000. This will tell me how much purchases I have made in the current year. Opening closing balance in the balance sheet and what we call depreciation will be taken, is already taken here. So you need not require to post it again, but the payment figure you are supposed to write on the payment side. This is how you will have to move in this particular question. Under this. Similarly, when you are going to prepare the subscription account, generally subscription preparation is far easier under this method because everything will be given. For example, you are already given income and expenditure figure. This is your income and expenditure account. 1,60,000 is given to you. You are going to write here 1,60,000. Is it clear to you? Subscription outstanding now 12,000. So opening due 12,000. Subscription received in advance. Opening advance is given. Subscription received in advance. Closing advance is also given. Subscription outstanding at the end of the year is also given. All you have to do now balance and find out this figure. This figure you must write on the receipt side. Opening closing due will be written on the what we call asset side of the balance sheet. Opening advance, closing advance will be written on the liability side. This is how you are supposed to prepare. Entrance fee 10,000 is given. Entrance fee you simply take to the debit side of the receipt account. To the receipt side. Contribution receipt side. Profit on annual sports meets receipt side. Every information is over. Actually, below it is given sundry expenses included prepaid insurance expenses. So if an item carries some information, you must prepare its account. For example, sundry expenses. It is given that it includes prepaid expenses. Now, prepaid expenses, you must write because it is an asset. So opening balance, you must write 1,200. Is it clear to you? So, sundry expenses include, actually it is closing balance. So closing balance of prepaid expenses will be written over here 1,200. It is closing balance, not opening balance. Is it clear to you or not? because it is written that in the current year you have paid sundry expenses and it includes some prepaid expenses. So obviously at the end of the year there will be some prepaid expenses. That is why it is closing balance. Now sundry expenses which you have written over here, see here, sundry expenses were written here 8,000. So you are going to write 8,000. Now you balance it. It will tell you that in the current year, total payment for sundry expenses were 9,200. 9,200 you are going to write on the payment side. 1,200 prepaid will appear on the asset side. This 8,000 is already appearing over here. Club owned a freehold ground. Now you simply prepare freehold ground, opening balance 2 lakh, you will get 2 lakh also. Closing balance, you must not forget to write it, what we call in the balance sheet. Regarding sports equipment, we have already talked about. Another information, club raised a loan of 40,000 from bank on 1/1/2028, which was unpaid till 31st/3/2029. Actually, your current accounting year is starting on 1/4/2028, ending on 31st/3/2029. Now, this loan was taken on 1/1/2028. That means in the beginning of the year, you had a loan of 40,000. And still it is unpaid at the end of the current year. That is why this 40,000 will appear in the balance sheet on the liability side of opening and also closing, because it has remained what we call unpaid. On 31st/3/2029, cash balance is 32,000. This is closing balance of cash. So when you are going to prepare your receipt and payment account, you will get the opening balance of cash, which you should not forget to write it in balance sheet. This is the approach under this method. These are the three important what we call methodologies. You need not require to stress upon preparation of balance sheet, although we have done it in the class. So this way around, you can easily what we call complete your, which are the important questions I have already marked, subscription questions. And second method, I personally believe that in this year you are going to get a question from what we call, you can do actually question number, for your feasibility you must do question number 2.3 and also question number 1.6. I have done all these questions in the regular classes. And further, just wait. Further, you can do any question out of this particular topic. You simply do 3.1. That is more than sufficient. It is clear to you, or better you do 3.2. Is it clear to you? So this way around, you can complete this particular chapter too. If you remember, actually, when I started off this particular series, at the time also I mentioned that there are some very lengthy chapters and they generally give jitters to the student, especially when the examination times are approaching. So that's the reason, actually, we have very comprehensively covered what we call accounting for branches, including what we call foreign branches, then chapters on departmental accounts, then hire purchase, installment and sale transactions, and then accounting for insurance claim, and even not-for-profit organization. These are the chapters, actually, these are considered pretty lengthy, and that's the reason, actually, often student fraternity reels under pressure that how come they are going to retain all the concepts, isn't it or not? Now, coming over to the important aspect of this particular part. When I started off these, what we call revision series, at that time also I mentioned that there are some chapters where you cannot be what we call selective. And please kindly note it down very carefully. This chapter, depreciation, you need to do comprehensively because that will also cover what we call your property, plant and equipment standard. Is it clear to you? And then this particular chapter, bank reconciliation statement, because already these are small chapters. You have already seen, actually, hardly in 1 or 2 classes we have covered all these chapters. And importantly, from accounting for bills of exchange, your focal area should be on accommodation of bills. Only this part you need to cover. I think we had covered nearly 3 or 4 questions, so you kindly do those questions. And as far as rectification of error is concerned, hardly one class chapter, and you need to do it completely thoroughly. Coming over to partnership, and as far as partnership is concerned, you need to focus only on admission of partnership. And because dissolution is a pretty long chapter, and as far as dissolution of chapter is concerned, now, dissolution of chapter, it is a pretty long chapter. There is simple dissolution, there is insolvency of partner, there is insolvency of what we call firm, then besides that, sale of business. So you can focus only on insolvency part. Is it clear to you? Insolvency of partner. In case of the time permits, you also do sale or conversion. Is it clear to you? These are very vital. These are very vital. And coming over to the chapter 17, that is accounting for meaning, scope, and significance. Of course, this is theory. We have also covered the theory. You simply have to listen to it because most of the MCQs will be covered from this particular part, even accounting concepts. Most of the MCQs which strike in the examinations are from these two theoretical chapters. That is the reason actually why you need to stress very hard upon these two. Capital and revenue expenditure, you need to do it completely and thoroughly. Completely. I think we have covered almost every year. We find that there is a question from what we call capital and revenue expenditure. Then four frameworks theory, hardly half page chapter is there. Is it clear to you? Do it also, because some MCQ you may be asked from this particular part also. So as far as these parts are concerned, once again I am repeating actually, depreciation you have to do thoroughly, completely, bank reconciliation statement completely. But accommodation of bills, as far as concerned, bills of exchange, as far as concerned, you need to focus only upon what we call accommodation of the bills. Is it clear to you? As far as rectification of error is concerned, you need to do it comprehensively. Partnership, you focus upon admission of the partnership. Partnership 2, you focus upon partners insolvency. And in case if the time allows you, do at least 1 or 2 questions of sale and conversion. Is it clear to you? Then theory, you simply listen to it, no problem at all. Then accounting concepts and capital and revenue expenditure you need to do thoroughly. And coming over to 4 frameworks of the theory, hardly half page chapter, so no important, hardly 1 paragraph. And we have covered in our regular classes almost everything. Coming over to the other part of the area. Now, if you are going to have a look over what we call chapter 10, final accounts of profit-making entities, or also known as final accounts of commercial bodies. Now, in this question, you need not require to focus upon questions which are related to trading and profit and loss account. Are you getting my point or not? Very slim chances are there that you may get a question out of that. So where you need to focus upon? You need to focus upon questions related to bad debts and provision for doubtful debts. Nearly 5 or 6 questions we did in the regular classes with respect to these topics, and these are very important topics. And especially questions related to trading account, profit and loss account, and balance sheet. You need not require to do these questions, but just to make the point clear, because you have been doing this particular topic since your class 11, you need not require to put in actually extra efforts. But only thing which you need to take cover of. Many a time I have seen actually students when they prepare trading and profit and loss account and balance sheet, they have a problem with respect to bad debts, provision for bad debts. Now, I have told you when we prepare trading and profit and loss account, in case bad debts are there given in the trial balance, you need to simply post it to the debit side of the what we call P&L account. If it is appearing bad debts, if provision is appearing in the trial balance, then you will have to write it on the credit side. Provision and bad debts, you simply actually write it over here on the debit side. When you are preparing trading and profit and loss account, I am talking about if you are preparing trading and profit and loss account and balance sheet, in that case, if bad debts which are already appearing in the trial balance, you simply take it to the debit side of the profit and loss account. Any provision which is appearing in the trial balance, obviously it will appear on the credit side, you are going to put it. However, whatever adjustments are there related to debtors, those adjustments will be subtracted from the debtors, and those adjustments will be written over here, whether these adjustments are related to bad debts, whether these are related to what we call provision for bad debts, or whether these adjustments are related to provision for discount. All these adjustments, first of all, bad debts will be subtracted, then on the balance you will create the provision, then on the balance you are going to create the provision for discount, and all these adjustments will come on the debit side of the P&L account and will be subtracted from the what we call debtors balance in the balance sheet. This is the only area of trouble where you need to focus upon. And regarding what we call questions, as I told you, regarding questions on bad debts provision, generally under such question, you will be asked to prepare what we call a bad debts account. You will be asked to prepare a bad debts account. Is it clear to you? You will be asked to prepare a provision for doubtful debts account. So under such question, first of all, whatever balance of bad debts are given, you simply bring it over here. In case some provision for balance is given, you simply write it over there. Then it will be given in the question that during the year so many bad debts occurred. So whatever bad debts occurred during the year, you will have to write it over here, no doubt about that. Are you getting my point or not? So whatever bad debts, your entry will be bad debts account debit to debtors account. So that means total bad debts occurred during the year, you are going to write it over here. Then you simply actually close this account. When you are going to close this particular account, you are going to transfer it to what we call provision for doubtful debts account. So whatever balance is there, you are going to take it to provision for doubtful debts. Now you transfer here and you write here bad debts. That's all. Now, the most important part is that because you must be given some debtors, and whatever debtors occur during the year, you first of all deduct the same. Whatever debtors have occurred during the year, you simply deduct the same. Now, whatever balance is there, question will give you that a provision at so and so percentage is required. Now, you create that provision on these debtors, provision for doubtful debts. Whatever percentage is given in the question, indirectly it means there should be so much of closing balance in the provision of doubtful debts. So you also deduct the same, and this will be your what we call closing amount of debtors. But importantly, whatever provision which you have created, that will be considered as closing balance. This is the most important part. Now, if you are going to balance this account, whatever balance will be there, that balance will be taken to profit and loss account. And in case if we want to show the profit and loss account, on the debit side of profit and loss account, you write provision for doubtful debts. That's all. This is how you are supposed to do these questions. Questions related to bad debts, provision for doubtful debts will be asked in the examination. This is where you need to stress hard. Is it clear to you or not? Now, coming over to accounting for joint ventures. If you remember, in the joint ventures, there used to be 3 methods, correct? Now, first method used to be joint banking method. No problem, wherein you used to prepare a joint venture account, then joint banking account, then partners capital account. And sometimes you used to prepare cash account and shares account also, or debentures account, depending upon the fact whether what we call the amount of the contract price is received in cash or shares or debentures. But it is not a big problem. Correct? As far as first method, even second method is concerned, under second method, when accounting is made by each party separately. Correct? When each party prepares account separately, that means there are 2 co-venturers, they are preparing joint venture account, and they are preparing what we call other co-venturers account. For example, A will prepare B account, B will prepare A's account. But both the parties are going to prepare joint venture account and other co-venturers account. And both the parties will record all the transactions. And finally, each party will come to know how much balance is due to the other party or to the other party. So no problem even in this particular part. But the most important part is memorandum revaluation account. Under the memorandum revaluation account, actually, generally what happens, suppose there are 2 partners, A. So A will prepare memorandum revaluation account. Correct? Actually, A will prepare, I'm sorry. If suppose you are being asked that prepare what, there are 2 partners and you are being asked to prepare what we call memorandum revaluation account in the books of A. And obviously A will prepare co-venturer with B account. Joint venture with B account. Joint venture with B account. Correct. Similarly, B will prepare joint venture with A account. Joint venture with A account. Is it? And then finally, actually difference is that in memorandum revaluation account, A will record only his own transaction, whatever goods he has purchased himself, whatever expenses he has incurred. Similarly, B will also debit this account, whatever actually purchases he has made and whatever expenses he has incurred. That means in this case, the party will record only its own transaction, not the other party's transaction. However, if there is transfer of cash, for example, A has transferred some cash to B. Obviously, when A has given some cash to B, so B is going to receive the cash. So you are going to write it on the debit side, and here you are going to write it on the credit side. So if there is transfer of cash, that will be recorded by both the parties. Are you getting my point or not? Because here both the parties are involving. For example, you are sending the cash. You are involved. Other party is receiving the cash. Other party is also involved. So this transaction will appear on both the sides. Now the point is that they need to find out the profit. In order to find out the profit, they will have to prepare what we call memorandum revaluation account. And here you need to exercise a bit of caution. Whatever transaction you have written on the debit side of this account in the books of A, you write those transactions. Whatever transaction B has written on the debit side, you also put it on the debit side. Importantly, such transaction which is appearing in the books of both the parties will not find place in this account. That is very important. Now, whatever sales they have incurred, you are also going to put the sales also. That means transaction where both the parties are involved and which has already been recorded in their own books, you are not going to put it on the debit side. Is it clear to you? Now the next point is that after that you are going to tally it account, and then you are going to find out the profit, and profit you must write on the debit side, and after that you balance it to know actually what amount is due to the other party or from the other party. This is how you used to actually prepare the account. Now what you are supposed to do from the examination point of view, here I have written under what we call joint venture. Where is joint venture? Account memorandum revaluation account you need to focus upon, and especially the last section which we did in the class, at least 1 or 2 questions you do it, that is more than suffice. Coming over to the consignment. As far as consignment is concerned, I need to require to elaborate what account you use to prepare. You have been preparing this since a long period of time. Now the question is that under consignment account only the last section is important. Correct? Last section we have covered nearly 7 or 8 questions. You simply go through those questions. That will hold you in a very good state. So you are not going to confront any problem. So as far as consignment is concerned, and I have a doubt whether any question will be asked in the examination or not from consignment. Now the last point is coming over to accounting for incomplete records. Now accounting for incomplete records, actually I told you under this there are 2 methods. If you remember, actually one way of finding the profit is net worth method, and another one is conversion method. Under the net worth method, I told you actually how to find out the profit. You have to find out the opening capital, you have to find out the closing capital. For that you will have to prepare the opening statement of affairs in case if what we call opening capital is not given. Similarly, closing statement of affairs in case what we call closing capital is not given. So after having determined the amount of opening capital and closing capital, now you are going to prepare a statement of profit wherein you are going to write the closing capital. Then you add the drawings, and of course if you have introduced any additional capital, you subtract the same. Is it clear to you? Then you subtract your opening capital. This way around you are going to find the profit. Of course this profit technically is not a refined profit, although we never use the term gross profit for this. Correct? This is profit. But in order to know the true profit, in case if any adjustments are given in the question, for example, question says that you need to charge depreciation. Important point is that all the adjustment will be applied on the closing balances. For example, question says that you have to charge a depreciation on what we call plant and machinery. So on the closing balance of plant and machinery, which will be available in the question, you charge the depreciation, write it here. Similarly, if question says that you have to create a provision at the rate of so and so, on the closing balance of the debtors, you create the provision. And after that, you will get the net profit. So under what we call net worth method, there is no problem. However, generally you receive the question in the examination from conversion method, if you remember. As far as conversion method is concerned, under the conversion method, if you remember, actually I told you, you will be given the trial balance. And generally, trial balance of some information you can say will be given to you, or what we call you may be given opening balance sheet. If you are given opening balance sheet, then no problem. Correct? For example, there is a particular question where you have been given the opening balance sheet. Let us say you are given opening balance sheet also. And some information regarding receipts and payment will be given to you. Because opening balance sheet is given, that when you have the opening capital. Now, conversion method means now we have to convert the accounts into double entry system. I told you it's a very simple topic actually. Unnecessarily phobia has been made that this is cumbersome, this is very troublesome, nothing like that actually. Correct? Now, under conversion method, I told you, first of all, you need to prepare a debtor's account, you need to prepare a creditor's account. It is not a hard and fast rule that you have to prepare, but it is always feasible if you are going to go by this particular approach. Debtor's account, creditor's account, you must prepare. After that, you have to prepare a cash account also. After that, you prepare a cash account also. At least these 3 accounts. In case cash and bank balances are given separately, for simplicity's sake, you also prepare the bank account also. Once you have prepared all these accounts, after that, actually what you are supposed to do, once you have prepared all these accounts, now you have to actually this is your main part. You prepare a trading account and profit and loss account. Correct? This is your trading account and this is your profit and loss account. But at the same time, you must open, all these accounts must be opened simultaneously. You open a capital account also. And then you prepare the balance sheet also. Now, if you are going to prepare the balance sheet, I told you in the class, I told you last year, that is opening balance sheet and current year balance sheet, you need to prepare. Last year balance sheet, current year balance sheet. That is the thing which you need to actually take care of. Now, the next point is that now, whatever opening balances are given in the opening balance sheet, for example, there is a cash balance, because I told you every item under conversion method must be posted twice. Must be posted twice. For example, if you are given opening cash, all you have to do is to simply actually take it to the debit side. Two postings are over, because one, it is written in the opening balance sheet, and now you are going to take it over to the debit side of the cash account. In case if there is bank balance, you also write bank balance here. Two postings are over, because one, it is already written in the opening balance sheet. Now, suppose debtors are given, you put it on the debit side. Creditors are given, you write on the what we call credit side of the creditors account. Then you will be given capital also, because opening balance sheet is given, you write in the capital account. Now you look towards the what we call information. Now, in the information, any information could be given. For example, they might give you actually that you have received so much cash from the debtors. Now, whatever additional information is given, you need to post it twice. For example, if you have received the cash from the debtors, you are going to put it on the debit side and on the debit side. You have paid to the creditors. Obviously, you are going to write it on the credit side. And if you have paid to the creditors, entry will be creditors account debit to cash account. You are going to write it on the debit and on the credit side of the cash account. If you have incurred any expenses, obviously your entry will be expenses account debit to cash. Once you are going to write it here, and then you are going to write on the debit side, depending upon the fact whether it is a direct expense or indirect expense. Suppose if it is wages, you are going to write here. Otherwise, you are going to write on the debit side of P&L account. Is it clear to you or not? Clear? Now, the most important point is then you have to tally it. Once you have tallied, you will either find out closing balance of debtors or credit sales. Is it clear to you? Credit sales you simply directly put over here. Similarly, credit purchases. If there are cash purchases, obviously, first you write in the cash account and then you write on the debit side. If there are cash sales, you write on the debit side of the cash account and also credit side on the trading and profit or loss account. That means every entry must be posted twice. So once you have found out your gross profit, obviously after that you will find out your net profit. Once you have found out the net profit, opening capital you already have. Is it clear to you? If there is introduction of additional capital, first of all, you are going to write it on the debit side, then you write it here, additional capital on the credit side. Now, whatever net profit is there, you will put that net profit on the debit side. If in the question there are some drawings, if word drawings is given, it always means drawings in cash. Is it clear to you? If there are drawings in cash, obviously on the debit side of the cash account, and you are going to write here. If there are drawings of any goods, I told you indirectly, it means your purchases will get reduced. You can reduce it from purchases or you can put it on the credit side. Is it clear? And drawings of any type will also find place in the capital account. Now you simply actually balance this account. Once you have balanced this, you will have the closing balances. That's all. Now all opening closing balance sheet can be easily prepared. For example, you have the debtors, opening balance sheet, you are already having debtors balance, cash balance, etc., any plant and machinery balance, etc. Suppose if there is some information with a particular asset, you also prepare that particular account. Correct? Generally, you will find the depreciation. Depreciation will be posted to the debit side of the P&L account and closing balance will be written in the balance sheet. So that's the point. This is how you have to move. Important point is that under conversion method, you have to think of in your mind entry and you have to post it twice. But important point, if you are taking an item from the opening balance sheet, then only once the entry will be done, because already entry has been posted once in what we call balance sheet. Is it clear to you? This is how we have to move under this. So as far as your financial accounting is concerned, if you are going to go by such rules, you are not going to have any problem. I'm sure I must have done at least something, a bit of help to you. In case if you have found out that these lecture series have really helped you, kindly actually let me know through your feedbacks. So under branch account, we have already covered it at great length. I told you, you need to focus only upon data system, stock and data system, and wholesale branch system. But as far as foreign branches are concerned, you need to know the rules. Hardly 2 or 3 mark questions will be given. Some elements will be given in the question where you will be asked to convert them into what we call reporting currency. Under departmental account, we have already covered it under revision series at great length. I told you here you need to focus upon questions related to managerial remuneration and corrected profits and uniform gross profits. Hire purchase transaction, you will be asked a question on partial repossession, but you will not be asked to prepare the ledger accounts. Rather, you will be asked simply to find out what we call loss or profit. Is it clear to you? Coming over to leases. Now, leases last section is very important. Correct? So you need to focus upon the last section which we have completed in this. This is the only area of concern. So you need to actually put a bit of effort with respect to this. Insurance claim, I have already told you, you need to focus very hard on abnormal line of goods. Under abnormal line of goods, this is the most important part, and you are surely going to have a question out of this one. Not-for-profit organization, we have already covered in the revisionary series, wherein I talked about the fact that subscription questions, generally you may expect a question on subscription calculation, and I also told you that under section 2, where income and expenditure account will be given to you, and you have to prepare a receipt and payment account and balance sheet. Conversion method, I just told you, incomplete method. Under conversion method and consignment, last section, you need to put effort, joint venture memorandum revaluation. Final accounts, you need to put extra efforts with respect to bad debts, provision for doubtful debts, which we discussed here. Depreciation complete, hardly 4 or 5 questions are there. Bank reconciliation, one class chapter, so I think you should be in a position to do within 1 hour. And then accommodation of bill, where you need to put a bit of effort. Then rectification of errors. Then partnership, you need to take into account only admission of partnership, but you focus upon partnership too. That is questions. Questions related to insolvency, partners insolvency, we covered 4 or 5 questions. You can do any 2 questions, and then sale or conversion in case if the time permits you. And as far as theory is concerned, simply listen to the theory which we have spoken of in the class. We have taken even the theoretical lectures, as you know, actually. So theory you need to do, at least listen to it once carefully. And then capital and revenue expenditure, if time permits, go through all the questions. That will hold you in a very good state, because sure question you are going to have out of it. Then 4 framework of theory. These are very vital area. Is it clear to you? Now coming over to the accounting standard. AS1, disclosure of accounting policy. Here you need to do case study 1, 2, 3, 4. Correct? Coming over to AS10, property, plant and equipment, case study 5, because generally property, plant and equipment, you will be asked only questions related to depreciation. So that is the reason I told you, if you have done depreciation completely, almost AS10 will have been covered. Coming over to effects of changes in foreign, sure question from this particular standard. This particular question you can expect as so sure question number 3, 4, 5. Case study 3, 4, 5 you must do. And this is the most important. These 2 standards are important. AS12, accounting for government grants. At least 6 studies we have, 6 case studies we have done in the class. You do all the case studies. Coming over to borrowing cost, case study 4 and case study 5 are very vital. And AS2, I don't think you will be asked a question, but at least do case study 1. But you may be asked a theoretical question or 2 mark, difference between permanent, what we call difference and temporary difference. Correct? That we have covered in the class. So these are the things, if you are going to pay attention to, I am very sure you will suddenly find that your workload has come down by tons, and you will suddenly feel relaxed. So kindly focus upon all these things, the point which we have done, because we have already covered lengthiest chapter, because 75% of your course are covered by these 5 chapters. And regarding that, we have already talked about joint venture and final account and what we call a single entry system today. And regarding the other one, I have given you some hints also. So this way around, if you are going to go about, I'm very sure you are going to come out with a strong performance in the examination. And we pray to the Almighty that each one of you come out with a flying and supreme performance. So on that count and on such hopes and on such prayers, I take leave of you, and I feel, and if you feel that you have been what we call benefited by this lecture, at least actually write a comment, and looking forward to have your session also. Shall meet you then obviously next session, as I told you, with all the blessings in the world, and with the hope that each one of you come out with flying colors. So on that count, actually I stop this lecture series.